Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Friday, September 5th, and in the past 24 hours, the amount of news that I woke up to this morning, because I kind of fell asleep early last night, Broadcom making new chips to compete with NVIDIA, which Broadcom's up $40 in the pre-market. The jobs data that we'll talk about that just came out 10 minutes ago, which is quite bullish, even though it's not the best data. That is affecting stocks right now, and you're seeing a lot of stocks go green because of that. Lululemon yesterday kind of fell off a cliff, was not the best thing for Lululemon, so we'll talk about that. I woke up to Elon Musk getting $1 trillion compensation package potentially if Tesla is able to hit some milestones, so we'll talk about that and go deep into kind of what's going on there. And then we have a lot of general other macro news that's going on based on some of the things we saw yesterday. As you can see right here in the pre-markets, folks, we are green, S&P 500 at new all-time highs. And that is because of the jobs data. We will talk about that jobs data in just a second, but there's a lot of news to cover as we get into it. Robinhood as well, getting some momentum in the pre-markets, 104.45. Palantir getting some momentum, as you can see, 157.36. Amazon was green 4% yesterday. Bitmine, which fell like 7% yesterday because of a NASDAQ rule that didn't apply to them. I thought it was kind of hilarious how Bitmine fell yesterday. That's up about 3% in the pre-markets. Broadcom again, $350. That's up 14% in the pre-markets. We'll talk about that. We got a lot going on. We got a lot going on. Open Door crossing over $6 and probably higher in the pre-markets based on that jobs report. That's up 5%, 627. Obviously, if you are leveraged into Open Door, you have been doing very, very well. And so you're seeing a lot of momentum across the entire board. Even Grab got a bid yesterday of about 3%. It's up another 1% in the pre-markets. Google right here got to 232 yesterday. SoFi, 2580. All of this comes down to the jobs report that we are about to get into right now. And we'll analyze what it means for the markets and how that's ultimately affecting everything that we have going on. Good morning. We did not have the market open yesterday. I'm sorry for that. I thought I told everybody 2 days ago that we weren't going to be able to do the market open. I guess, like, no matter how many people you tell, it's not enough. And so I know a lot of people are wondering about it. I was at Aipcon. You guys saw that yesterday. And I'll talk more about this moment later, but this was obviously a big moment in my life. Big moment, I think, for all of us as a community. We did have Dr. Karp join the live stream. I kind of teased it 2 days ago at the end of the stream. I said, guys, we might have a special guest who joins the stream. I didn't know if he would actually join. They told me he would join. I didn't, he's a busy guy. I didn't know if he would actually make the time to join. And he made the time, and he spent some good amount of time on that live stream yesterday. And it was special. It was a special moment. So there's a lot of news to get to. I will talk about this towards the end of the show because I know we got a lot of stuff going on. But yeah, it was a cool moment. It was a cool moment, and I'll give you guys the entire backstory on how this happened yesterday, and we'll talk about that. All right, jobs report. What do we got going on, folks? We missed badly, but bad news is good news. U.S. August non-farm payrolls, 22,000 versus 75,000 expected. Now, this is kind of nuanced because 20 minutes before this data came out at 8:30 a.m. Eastern, the BLS came out and said, we are experiencing technical difficulties. I don't know if some people saw those headlines. And immediately I was like, oh, are they just not going to release the report? Because obviously the old BLS commissioner got fired and you have a new one that got hired. And so it was kind of like, are they just not going to release the report? How are they thinking of the report? But inevitably they released it at 8:30. And Lutnick was live and he was blaming the BLS issues on old leadership. So I wasn't even sure if we were going to get the report. We ended up getting the report. I still don't know if the report is fully accurate based on the quote unquote technical difficulties that they had, but it's not a juiced up report. I mean, we missed by 50,000. So it's hard to imagine that they juiced it up that bad unless we were supposed to miss by 100,000. Regardless of the size of the miss, it's a bad miss, whether it's 50,000, 100,000, 22 versus 75. That is not an economy that's growing in the context of the number of jobs per month. As a result, yeah, I think it's time for some rate cuts. And you would think, well, wait a second a bit. If we added way less jobs than expected, last month, by the way, was only 79,000. So we actually went down 50,000 month over month in terms of new jobs that are added. Then maybe the economy is not in the best situation, right? And we should have some issues and we should think that there's going to be some problems. Yes, But then take a look at this picture, which is the 10-year. The 10-year yield, 10-year bond in the United States for our debt is at its lowest levels since April. And the reason it's at its lowest levels since April is because, ironically, this is just the nature and nuance of markets. This is why sometimes it's hard to understand the paradoxical movement of how markets operate. As the economy worsens from a job market perspective, the market, the credit market in particular, says, wait a second, we're definitely going to cut rates because cutting rates is a stimulus to the economy. If the economy is doing bad, that means the yield on these bonds should come down as people rush to buy their bonds and lock in their 4.097%. I mean, could you imagine if that 10-year gets below 4% today? That would be exceptional from a credit perspective because it's lower than the screenshot. Now it's at 4.091 instead of 4.097. That would be exceptional for the broader market because as these rates come down, what's the most important thing for the Trump administration, which he's been talking about for the past 10 months now, is refinancing our debt. We have $9.7 trillion, $11.5 trillion. $9 trillion of that is old debt. $2.5 trillion of that is new debt that we have to refinance. And the only way to refinance that, well, not the only way, but one of the most beneficial ways to refinance that is to have these rates come down, which would cause yields to come down because obviously then credit investors would buy those bonds because they would want to lock in their yield. The only reason, it's not like the Fed cut rates today. The reason that yields are coming down right now is because this labor market report was awful. And the market's thinking, okay, labor market report is bad. Labor market's not good. Fed's going to cut. Now, 25 bips is likely going to happen. Let me check the probabilities right here. I've started seeing rumors of a 50 based on this. Yep, there you go. All right. So there's a 98.1% chance. Yesterday, there was no mention of any percentage of a 50. Now there's a 1.9% chance of 50 bips. Which, based on this job report, and you've got some doves on the Fed right now, I mean, like, I don't think it would be crazy to do 50. I doubt what's going to happen. But the fact that it's now even popping up in the conversation based on this jobs data likely means that there is a shot. We're just going to have to see if that ends up playing out. So this is bullish. Now, why is this bullish? Because at the end of the day, 22,000 versus 75,000 jobs is not the end of the world. It's not like we lost 400,000 jobs. So at its core, the way I'm kind of conceptualizing this as a bull, by the way, S&P 500, remember that nasty Monday we had 637? We were at 632. We are at 650. I mean, we recovered relatively all of the losses that we had on Monday. That was your dip for the week, at least on the broader market. And now we're at 651. We'll see how the market opens on this. But if Q3 earnings can maintain the level of momentum that they had in Q2 earnings, which was exceptional, if inflation can be at bay, it doesn't have to go down a lot, but at least let's not have it spike up like crazy, and rates come down, you've got a perfect storm that the administration has been asking for the past 7 months, caused by jobs data that is not the best. Now, the nuance here is the unemployment rate came in at 4.3% as well, in line with expectations. 4.3% is not a recession. It's just not. Like, you need to get, at least near that 5.2%. It needs to be about 1% higher than what it was a year and a half ago, and we're just not there yet. In terms of unemployment to have an issue, you need to have initial jobless claims come in at 350 to 375,000 for a recession. Yesterday, they came at 237 versus 229 expected. Still bad, but not aggressive in the context of a recessionary jobs report. If we can walk the fine line between good earnings, inflation being relatively stable, and the jobs report or the jobs data not being horrendous, we're going higher. Like, we are going higher because you will have lower rates, you will have risk on assets that catch a bid. And if those risk on assets, Palantir, NVIDIA, Robinhood, Rocket Lab, Tesla, if they can put up the earnings growth that is necessary to benefit, and likely should put up the earnings growth to benefit, because in a lower rate environment, people should buy more cars, theoretically, for Tesla, right? People should trade more on Robinhood, theoretically. Like, all of that should be earnings momentum carrying us into 2026. So this is a bullish jobs report, ironically, even though it's not that good, because you needed some bad news to be good news. And it just can't be that bad. Like, it can be bad to scare the market enough to get these yields to come down, but it can't be bad enough for the market to be like, holy crap, like, things are really breaking. And so as long as Trump doesn't let the economy break based on this jobs report, this jobs data, then I think we're okay. If the economy ends up breaking and we start seeing 100,000, 200,000 job losses per month, then we've got some issues. But the market's not expecting that. Obviously, Tesla right here, up 3%. Grab's up 1%. Robinhood's up 2%. Palantir's up 1.5%. Broadcom, which we'll talk about in a second, that's up 14%. Opendoor is up 7%. S&P 500, 651.51, new all-time highs in the pre-market. Apple is 13 cents away from 240. Ethereum, 4,400. Rivian's up. Hims is up 2%. Salesforce, which had a nasty day yesterday. Even they are up a little bit right here. MongoDB, that's up 1%. CrowdStrike is up. I mean, you got pretty much everything that's moving off the idea that we are going to get these rate cuts, and we're likely going to get more rate cuts than expected based on some of these job reports not being that good. So that's what we got. So if you bought the dip on Monday, I know we're only 1 week into September. We'll see what happens over the next couple of weeks, but the seasonally weak September thesis so far has not necessarily played out. This entire year has been an anomaly in terms of how the market has conceptualized what has been going on. But this labor market report was not the end all be all for how we think about the broader market. Let's get a little bit more coverage on this jobs data, and then we'll move on to Broadcom, Lululemon, and see what else we got going on across the entire market.
Hey, Rick, what are you thinking about this? I know you want to jump in here.
Well, I think the points you just made are excellent, and that's really where I wanted to go, is that if you look at pre-COVID as some sort of baseline for these numbers and the distortions that have happened since, whether it was because of injections of funds, the jump in inflation, we all know the issues. So if you look at an unemployment rate of 4.3, that isn't so bad when you look at it historically. Hours worked, even to 3.7, which is to me the most disturbing part of the data today on the average hourly earnings on a year-over-year basis. But that's still 0.3 higher than what we were doing the first couple of months of 2020. So the way I look at it is we've now become kind of a no hire, no fire economy. We're not seeing a huge amount of job creation. But to take that and think that we're going to put the economy in reverse and hit the gas, I don't think we're going there. So I think that the path that Fed Fund futures seem to be outlining with the 3 meetings of potentially hot for the following 2, we know SEP is for sure hot, and we can know the white noise may disappear. But ultimately, I think we're getting back to some sort of normal, and the market's going to have to grapple with, can the equity prices remain at these levels? Is the air too thin? There's going to be potentially some rejiggering in the economy, but I completely disagree with the notion that the labor market is really going to be suffering. I just think it's getting back to something more sustainable.
I agree. And if it's sustainable and not suffering, and we have rates come down, that's where you have the ability to continue the bull market led by ultimately earnings growth that is not going to be disrupted by anything too aggressive in the macro. Okay. Broadcom, dude. So I didn't catch all of the news yesterday. I kind of knocked out once I got home from Aipcon. Again, I'll talk more about Aipcon towards the end of the show. But I did wake up and started reading about what happened with Broadcom, and apparently they're going after NVIDIA. OpenAI is set to produce its own AI chips for the first time next year, starting production in mid-2026 with Broadcom. Broadcom CEO on the earnings call yesterday referred to a mystery new customer committing to $10 billion in orders. That mystery new customer is OpenAI. And as a result of it being OpenAI, who has the pockets to be able to pay for $10 billion and probably the demand to pay $10 billion for these chips, the market is loving it. The market is absolutely loving it. This is what Bank of America said. They raised their price target from 300 to 400. By the way, Broadcom was already a $1.2 trillion company going into the print. And they're going to open at around 1.3, 1.5, which is incredible. I mean, that's a lot of market cap being added to a company that doesn't even get talked about that much as like one of the major AI players in terms of the media, but it is obviously becoming a powerhouse. Bank of America said Broadcom's custom AI chip continues to build with fourth large customer, OpenAI, per media reports, likely joining the current 3, Google, Meta, and ByteDance. The $10 billion addition to prior fiscal year 2026 growth now puts AI growth closer to 110% versus 55% in their previous guidance. Further, Broadcom suggested growth could accelerate further into fiscal year 2027 on additional programs and new customers. That's likely going to happen because if they're able to create competitive chips with NVIDIA, and I don't even know exactly if this is super competitive with NVIDIA. To my understanding, it is a custom ASIC chip that is needed by some of the hyperscalers and obviously needed by OpenAI, some of the large language model foundation creators. I don't know if it necessarily competes strictly with Blackwell. Again, honestly, I'm not educated enough on the semiconductors to be able to see if that is the exact comparison here. We'll try to get Jose on and see what he can say from that. So NVIDIA's down on this because the market's immediate assumption is, wait a second, Broadcom right here, 350 in the pre-markets. This is bad for NVIDIA. I don't know if this is bad for NVIDIA. I don't know if that $10 billion that OpenAI was going to spend had to go to NVIDIA and it's going to Broadcom over NVIDIA. And same thing with some of their some of their other customers. I think that this is a very, very large market. For anyone saying AI is a bubble, again, I mean, dude, Broadcom just committed to $10 billion in fiscal year 2026 guidance ahead of expectations. $10 billion, going from 50% to 110% year-over-year growth because they have a committed order by a new customer. And that customer is OpenAI. And if the OpenAI partnership works out really well, there could be more customers. Like, it's just hard to say that's bubblish when that's real money coming into Broadcom for their product. And as a result, the street's going crazy about it right now, up 14%, because they're like, all right, wait a second. It's having a little bit of an NVIDIA moment. I don't know if it's going to be able to sustain that type of growth the way that NVIDIA has, but it's having one of those NVIDIA quarters. And as a result, the stock price is reflecting that, up 14%. That's not easy for a $1 trillion company to move like that. And that's why Broadcom is at 350. Again, I don't know, ASICs versus GPUs. Is this necessarily that bearish for NVIDIA? My gut tells me no. I think there's a lot of room for the entire market to grow. And this, to me, only reinforces that there is going to be so much demand, minimum, for the next 3 to 5 years, instead of 12 to 24 months. Let's take it to 36 to 60 months for building out this AI infrastructure. Based on some of the comments in the White House yesterday by a lot of leaders, that was another big thing that happened yesterday. You had a bunch of heavy C-suites with Trump in the White House. They said, we're going to be spending a lot of money for a lot of time, and that's likely not going to be stopping anytime soon. Here's some clips right here. This is Meta CEO Mark Zuckerberg telling Trump he's ready to spend hundreds of billions of dollars over the next 10 years on AI.
Well, thanks for hosting us. I mean, this is quite a group to get together. And, I think, all of the companies here are making huge investments in the country in order to build out data centers and infrastructure to power the next wave of innovation. So it's, we don't often get together as the CEOs of the different companies, but it's good to see everyone.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, I don't know, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant.
That's a lot. Thank you, Mark. It's great to have you.
Shyam Sankar was there as well. Lisa Su was there. Chamath and David Sachs were there. It was quite interesting, the amount of people that were at this event. You also had the stock that just got to all-time highs, Google co-founder Sergey Brin, who was at the dinner as well.
I also just wanted to mention, we don't have to get into all the details we talked about in the Oval Office, but I think it's a real incredible inflection point right now in AI, and the fact that your administration is supporting our companies instead of fighting with them. It's hugely important. Obviously, it's a global race, and I think we're at the cusp where these AI models are about to become profoundly useful, kind of beyond the, okay, wow, it's cool, can do that, but actually day-to-day incredible utility, incredible productivity. So very grateful for your administration support.
Elon was not there. He did say on Twitter that he got invited, but he couldn't make it. I'm not going to lie, bro. If Elon was there, I think it would be a little awkward. He kind of said Trump's on the, well, not kind of. He said Trump is on the Epstein. It's just a little awkward, I would imagine. They did have a bit of a falling out. So I think Elon could have made it if he really wanted to. He probably could have adjusted the schedule. But he probably chose to not show up there. This was what Nadella had to say at the meeting as well.
Thank you so much, obviously, for bringing us all together, and the policies that you have put in place for the United States to lead. And one of the things that I think has made this industry unique is not only the innovation, but it's the market access that you have obviously championed for us all over the world, and also the trust the world has on American technology. I think that everything that you're doing in terms of setting in place the platform where the rest of the world can not only use our technology, but trust our technology more than any other alternative is perhaps the most important issue. And you and your policies are really helping a lot. So thank you very much. And also I wanted to thank Madam First Lady for hosting what I think is perhaps the most defining issue, which is about skilling and economic opportunity that comes with AI. And so I deeply appreciate your leadership there as well. Thank you.
I think it was good for the health of the bull market to see this type of CEO leadership dinner with the president of the United States. I will tell you guys one thing. Again, I'll talk more about Aipcon towards the end of the show today. I talked to about 3 or 4 customers yesterday. Again, I know there's still questions of like, does AI have any ROI? Is it real? Like, is this a thing? Is this all fake? Like, the customers that I talked to, forget even Palantir, the customers that I talked to in general about their approach to AI, their company's approaches to AI, a couple of them were startups, a couple of them were public companies. I mean, it was just like, these people, the reason they're at Aipcon is because of how much they believe in not only Palantir, but their version of enterprise AI adoption. And it's just laughable now when some people say it's a bubble, because when you talk to these people, their argument around why they're embracing AI is that if we don't embrace this technology, we are dead. We cannot be competitive in the future. We cannot compete with the people that, quite frankly, are ready to take us out of business because they're partnering with someone else besides Palantir to be able to get ready in the context for the AI arms race that is going down. And what do I mean by be competitive? Very simple. We don't have to get super academic about it. Increase your margins, decrease your costs, increase your growth. That's it. If you can decrease costs and increase revenue, you will get a higher multiple on your stock. You will get a higher valuation on your company. And all these companies understand that their competitors are doing that. And as a result, they need to embrace AI. And some of the stories, I got a couple of their contacts, and hopefully they'll be able to make the channel. By the way, S&P 500, 652, new all-time high in the pre-markets. I was talking a little bit about it yesterday. That company that partnered with Palantir called Tomorrow.io. One of the senior leaders there was talking about weather models and how they service the Fortune 50 to be able to give them the most accurate predictions on what's going to happen with the weather. All of that is a big data AI problem. And the way he was describing the relationship between the GPUs, the LLMs, the ontology, their business, and then the outcomes they can deliver to their clients, none of this happens without the revolution we're seeing in AI. And so I guess the jury's out on how transformational it will be. But to say that companies are not seeing the transformation and wanting to really double down on the transformation because it's increasing their bottom line is hard to say for people that have not spoken in real life to these customers that are getting value out of it every single day. And it's not like these customers are changing their business overnight, but they're realizing there is a path to change their business. And that is the most exciting part, because in any technological revolution, you want to see how you can hop onto that curve with the rest of humanity and be potentially one of the winners. And even if you're not one of the biggest winners, if you even get a little bit of that pie, your company can change dramatically. So it seems like it's a real thing. I think it's good that Trump had this meeting with all these leaders, because obviously these leaders are at the forefront of all this innovation. NVIDIA is not going to stop spending. Microsoft's not going to stop spending. Amazon, Apple, not going to stop spending. By the way, the reason Amazon was up is because their custom Trainium chips. I believe there was a headline about it yesterday or 2 days ago after hours. Amazon right here, 236. It was at 235. Kind of, it's not having its Google moment yet, but maybe breaking out a little bit. And this one was at 250 back in January. I believe there was a contract for their Trainium chips, or there was some headline around how their Trainium chips are being used in more data centers. And that is their chip that competes with NVIDIA. It's not like super competitive with NVIDIA from a financial perspective, but it is competing with other people that are getting NVIDIA chips. Same thing with Google's TPUs. And that is what, SemiAnalysis. They put out a report. SemiAnalysis is the consulting firm around semiconductors. They said, hey, based on our projections, AWS should grow 20% by the end of this year, not 17% as the street was expecting. So that 3% increase is primarily based on their ability to sell AWS workloads with Trainium chips. And that's why Amazon caught a bit as well. Yeah, there's the headline right there from Sam. 1.3 gigawatt data center for Anthropic. That's the customer, Anthropic, which Amazon is also a massive investor in. Using 1 million Trainium 2 chips will add AWS growth to 20% guidance versus 17%. And yeah, you put all that together, you got the S&P 500 at all-time highs based on a lot of leadership in AI, only confirming that this market is an opportunity that's not going away anytime soon. S&P 500 potentially will announce that Robinhood gets in. I will be at the airport today live. I think the announcement comes out at 5:15 p.m. Eastern. I will be live. I think I'll be live for the market close. I'll be live for the market close, and I'll stay live for that hour and 30 minutes until we get the announcement. I don't want to get people's hopes up because I don't think it's actually going to happen for Robinhood. But if it does happen, that would be awesome. If it doesn't happen, then it is what it is. But today we should be getting the announcement. I will confirm later today that it's happening today. I'm pretty damn sure it's happening today. Maybe I'm wrong, but I will confirm that later towards the end of the show. And then 5:15 p.m. we'll see who gets added in, and hopefully it's Robinhood. But if it doesn't, then maybe we get stood up again by the S&P 500. They just rebalanced that other company last week, IBKR, into it, so they might just say, hey, we don't need to do any rebalances for the end of the year, and then that's it. The hopes of Robinhood getting in this year, AppLove, and all those, that's done for the whole year, and so we'll have to wait until 2026. But we're going to see how that ends up playing out. Tesla. All right. So speaking of AI, this news this morning was pretty incredible to see. Tesla right here is at 347. That's up 2.65%. Elon Musk is going to get $1 trillion of compensation as per Tesla's new share, I guess, proposal towards the board of directors and towards shareholders in terms of what or how many shares Elon would get if these milestones are hit. As you can see right here on the screen, basically he needs to get the company to 8.5 trillion. He needs to get the company to 8.5 trillion. And that includes 20 million Tesla vehicles delivered, 10 million active FSD subscriptions, 1 million bots, 1 million robotaxis in operation, 80 billion of adjusted EBITDA, all the way up to 400 billion of adjusted EBITDA. If he can get that to happen, then Elon gets 3 billion shares, 3.5 billion shares. Yeah, I believe that's 3.5 billion, if I'm not wrong. Oh, sorry, 35 million. That looks like 35 million. Yeah, 35 million shares. And that would end up being worth about 1 trillion if Tesla can make that happen. So it's quite incredible to see how that would play out if it does play out. I mean, there was a lot of commentary this morning in terms of how Elon would be able to get that to happen. I think he deserves it because it's like, well, it's just like 2018, right? The company was worth 50 billion. The package was, hey, if Elon can get it to 1 trillion, then he gets another, like, I don't know, 100 billion or whatever the compensation was. And now they're saying the first tranche milestone is 2 trillion. The last tranche is 8.5 trillion. Each tranche, other than the last two, requires an additional 500 billion increase in market capitalization. Each of the last two requires an additional 1 trillion increase in market capitalization. So for him to get those new shares, it has to go up by 500 billion every single time. I mean, that's not easy, bro. That is not easy. You are talking about massive S-curves on Tesla in regards to robotics, FSD, and humanoids, and also the overall robotaxi operation in order to make this happen. And so to me, I'm like, great. I love it. As a Tesla shareholder, I'm like, if he can actually get the market cap to those levels, he deserves every penny. It's going to be hard to do that, but I think that's kind of the point. And as a result, I don't think it's the worst thing in the world for him to have this compensation package.
Breaking news we want to get to right now, and this is a biggie. It's coming from Tesla. The company's board calling on shareholders to approve a new long-term incentive package. This is a compensation package for Elon Musk, and it is a remarkable, and the size of it all is just spectacular to even contemplate. In a proxy just filed, the company details a performance award that it says is designed to retain and motivate Musk. Much like Musk's 2018 performance award, he will only be paid if he delivers on goals, including reaching adjusted EBITDA targets and rolling out product offerings such as the delivery of 1 million robotaxis and AI bots into commercial operation. He gets nothing if he doesn't hit the numbers. It's very similar to the 2018 program.
I mean, regardless of what you think about Elon as a person, how can anyone disagree with that type of compensation package? Either you get everything for producing value or you get nothing for not living up to the value that shareholders and the entire market expects of you. And obviously there's some very high standards for a quality company like Tesla. I just don't know how anyone can find the red flag in this compensation package. It's just a question of if Elon can execute. But if he does, he deserves the money.
In this respect, if Musk wants to receive the full award, he needs to create, are you ready for this? $7.5 trillion, that's with a T, in market value for shareholders. That means that Tesla would have to reach a market cap of $8.5 trillion, by the way, which was twice the size of NVIDIA today, 3 to 4 times the size of Amazon today. And it's,
he doesn't get any
mind-boggling.
If he doesn't,
we're going to walk through the numbers in just a moment, because the way it's set up is he will collect effectively 1% of the company. So this package in total could potentially be worth more than $1 trillion if he were to get to these numbers. So I want you to look at the screen right now because you'll understand what's happening. The first tranche of any income he could collect would only come if the company effectively, from a market cap perspective, were to double in size. Right now, it's a little over $1 trillion. Tranche one is at $2 trillion. Not only do you have to capture $2 trillion, you have to capture one of the metrics, and this includes an EBITDA figure, how many robo-taxis they sell, how many robots they sell. And so
and if he doesn't meet any of those metrics, he doesn't get it?
If you don't meet the metrics, you get nothing. So this is, again, and I will almost repeat myself from when we were together in Davos 2018. This is, to some degree, the most shareholder-friendly deal you can get. He only gets paid if it actually works. He gets nothing if it doesn't work.
He doesn't get, and this is, I thought this was going to be a make good for the stuff he never got. Does he ever get any of that?
So as part of this, as my reading of it is that he is going to be paid. What they've also asked for is an opportunity to pay him the previous package. So this is on, just to be 100% clear, this is on top of the package that was created back in 2018 that then the Delaware court struck down.
Right.
They have since moved to Texas, and it's also worth noting the law in Delaware changed such that had the package been put together after the law had changed, he would have been able to get that package. So what's going to happen now is that is still on appeal. Mm-hmm. We'll see what happens with that. But effectively, they're asking for permission from shareholders to pay that. So that's still on. We're talking now. That's a retroactive situation.
Asking permission from shareholders or this, or they don't think they're required
no,
to in Texas?
No. In this instance, they, again, need to ask for permission for this package. But this is a go-forward package that effectively is the next decade. So
I don't know how any shareholder is not voting for this. I mean, you're going to have minimum, I would say, 65% of shareholders say, yes, this is how we want the CEO to be compensated. And as a result, Elon will set himself up to get $1 trillion in compensation if he can get the company to these levels. Again, I simply can't find the red flag about this because it is basically, I mean, Elon obviously agreed to this proposal by the board, which is why they put it out publicly today. And Elon likely thinks he can take this bad boy to 10 trillion. Is that $1 trillion now? But it's not just 10 trillion. Like, you can't just get to 10 trillion on hype. Like, you actually have to have the metrics, which is why it includes the millions of cars and the bots and the adjusted EBITDA to be able to justify that type of a multiple to get to 8.5, 10 trillion. And I feel like if you're a Tesla shareholder, you've got to be happy today that regardless of the stock being relatively flat over the past couple of years, and this year not performing as well as some of the other companies, the trajectory of that Tesla stock has ambitions that are very high. And it likely gets more people to buy into the stock if they think Elon can take it to 10 trillion, but it also likely keeps shareholders to continue holding their stock if they think it can get to their levels. So don't you think the sheer number is a red flag? No, not at all. I mean, look, the reason I don't think it's a red flag is because most people that I understand that are bullish Tesla believe genuinely, like not some pipe dream, they genuinely believe this could be a $10, $20 trillion company if the robotics S-curve and the FSD S-curve are as massive as people think. Now, maybe those people are pie-in-the-sky dreamers around the potential of what Tesla could be like. But, I mean, when you really look at the numbers just on robotics alone, if it does become what we think it can become, there is a world in which this scales dramatically over the next 10, 20 years. And this is one of the greatest revolutions of our lifetime in regards to technology. So Elon's compensation being aligned with that, to me, is bullish. And so I would say it's bearish if they were like, oh, Elon will get $1 trillion if he gets the company to 4 trillion. It's like, okay, well, Jensen got the company to 4 trillion and Jensen's worth 100 billion. But like, Elon's really got to get it to be double the size of NVIDIA, which is not easy. NVIDIA's going 50% year over year. They're doing almost 60 billion in revenue every quarter. Like, that's just not something easy to live up to. But that is the milestone. And I think it would be pretty incredible if Elon gets it there. By the way, guys, this 10-year, oh my bullish. This is the lowest level we've seen in 5 months. It was at 4.062 while I was playing the CNBC clip. Now it's at 4.07. If this bad boy comes down to 3.9, I mean, my goodness, if we see that 10-year start to collapse. Remember on Friday, or not Friday, Monday, when the S&P was down 1%, the biggest headline was global bond yields are going up. Where's the price of gold right now? Well, those global bond yields are coming down, especially in the United States, which is nice to see. And if they continue to come down, equities likely catch a bit of a bid. White House economic advisor Hassett anticipates that U.S. job numbers may be revised upwards. Okay, ironically, the reason bonds are coming down is because the U.S. job numbers are not going up. So here's the problem. Trump has an ego. The White House has an ego. And their ego wants to make it seem like the economy is growing and there's tons of jobs being created every month. That ego, I don't think, is worth the bond market versus telling the truth, because if the truth is that the jobs are not being added at the level that Trump wants to add 300,000-400,000 jobs a month, which it just seems a bit ridiculous given the state of the economy and the recovery we've had since COVID to be able to add that many per month, maybe in a couple of years. But right now, it just seems hard to imagine that. If we were adding 100,000 jobs a month, we would not be having the bond market reacting the way they're reacting right now, because they would be scared. They would be like, wait a second, this economy is way too heated. J-Powell would definitely not be thinking about a rate cut. So it's ironic because the Trump administration is going to have to figure out how do they manage the ego of wanting to prove to the American people that they're adding jobs with the reality of the fact that the only reason Powell is thinking of cutting is because of the labor market, not inflation. It's definitely not inflation. PPI and PCE were not good over the past couple of weeks. It's labor market being like something that Powell is scared about. And that's causing a little bit of pain for getting these rate cuts. By the way, gold's basically at all-time highs, so it's not like gold is selling off. Silver still at 37, so that one's not changing. So we're getting people to buy up some bonds, which is good. And they are also buying gold and silver. Bitcoin and Ethereum, I think, are not doing too bad either. We got 10 minutes until the market opens. Bitcoin right here is at, what, 112, 113? Not bad. And then Ethereum, I think, is at 44.50, 44.58. Which is nice to see some of that money piling into those risk-on assets as well. Yeah, silver is actually at 41.80. You're right. I was looking at yesterday's price. The silver futures right here are at 41.80. So that's above 41, which was that 2011 high that we saw. Silver basically catching up to gold at this point in terms of the rate of growth that it's taking. All right, Bitmine, real quick. So I think the Bitmine fall was hilarious yesterday. I bought another 100 shares at 41.97. The NASDAQ came out and basically they said, hey, if you are a crypto treasury, we are going to instill harsher regulations on how you disclose your share offerings, your share dilution, all that stuff to the broader market. And as a result, every company that was listed on the NASDAQ ended up taking a massive beating because they can't just immediately hit the ATM and dilute shareholders to then be able to get that money to then buy crypto, which is the entire business model of these treasuries. The funny thing is, and Bitmine put out a press release this morning clarifying, they are not listed on the NASDAQ. So as much as the market got afraid of some of these companies like a MicroStrategy that have to deal with those things, Bitmine is listed on the New York Stock Exchange. Now, could the New York Stock Exchange also follow the NASDAQ and kind of adopt the same rules? Sure. But even if they do, this is not bearish. You've got a lot of scammy crypto treasury companies that do not have the types of investors that Tom Lee has and do not have the type of transparency that Bitmine has in terms of how they're acquiring their Ethereum and how often they update investors and how much they communicate to the public, all that stuff. Those guys should be weeded out. And if they can't properly disclose, if they can't actually explain what they're doing, if they're obviously doing it as a grift, by the way, and I'm not saying anything right now, but Eric Jackson, the head of the Open Door Army, which congratulations to him, Open Door at $6. I mean, obviously the community effort has been enough to get this stock to rally. It's up 7.5% right here in the pre-markets. He tweeted yesterday that he's coming out with a crypto treasury public company. And it is a multi-strat crypto treasury public company. I don't know what cryptos are going to be inside of that company. I don't know how it's going to go public. Is it going to be a SPAC? Is it going to be underwritten through a traditional IPO? I have no idea how it's going to happen. But he did announce yesterday that he's coming out with a multi-strat crypto treasury company. I will reserve judgment until it comes out and we get the proper disclosures. But I think companies like that probably should be forced to give as much transparency as possible to the NASDAQ if the NASDAQ is going to have them being listed on the exchange. So you better not list it on the NASDAQ. Yeah, I don't know. I mean, like, but the point is, if there's more of these crypto treasury companies that are getting excited to go public, they should have harsher regulations. Bitmine is not in a situation where they need to be worried about regulations because, to my understanding, and maybe I'm wrong, I don't think Bitmine is doing anything unethical, and they've been very transparent. Tom Lee's done like 7 podcasts a week explaining exactly what they're doing and how they're doing it. And they have a press release pretty much every week explaining their updated NAV, their updated amount of Ethereum on the balance sheet, all that stuff. So yeah, I bought more. I mean, look, I'm long-term bullish Ethereum. I want to get exposure to it. I think Bitmine, not only the covered call premiums, but the actual alpha that I think it provides if Ethereum gets to what we think it can get to, which is relatively stronger performance than a lot of equities in the market. I mean, I think Ethereum can double. I don't know when, but the path for Ethereum to get to 8,000, 10,000 based on not pie in the sky hopes and dreams, but stablecoin usage and tokenization, which as I learn more and more about it, it's very hard to imagine those don't expand. I think Bitmine will be a beneficiary. So I ended up buying the dip. By the way, I'm going to do a Twitter thread probably over the weekend about the Genius Act, because I was reading a lot more about it yesterday when I was in the airport, or 2 days ago when I was in the airport. And dude, if you read the Genius Act and the way it's written, it is like almost an explicit dog whistle to the fact that the US government needs a bidder on US treasuries. And what stablecoins unlock, a lot of that benefiting Ethereum, is the ability for all these crypto ecosystems, whether it's a traditional blockchain company, whether it's a crypto treasury, whether it's a stablecoin provider like Circle, or whether it's a JP Morgan, PayPal, Robinhood, all these companies that are engaging in their own stablecoins, they need to peg those stablecoins one-to-one with US treasuries. And the government really, really needs a bidder on treasuries because we're spending like crazy. Our deficit's exploding. Our debt went from 36 trillion in January to 37 trillion by September. And you need someone to buy these treasuries because at some point, Japan and China might not be enough, which are the largest owners of our treasuries. It's almost like the government is explicitly saying stablecoins and crypto, we are going to prop up because we need them to be propped up to have a bidder on treasuries. And that is bullish Bitcoin and Ethereum. And Ethereum uniquely, because it's differentiated from Bitcoin in the fact that stablecoins are going to benefit their blockchain and their overall network. So that to me makes a lot of sense. And at the end of the day, if you have the US government basically getting ready to make sure there is a constant bid on their treasuries via these stablecoins, and Ethereum picks up even 20, 30% of that entire market, then I think Ethereum goes higher. And that's why I like the investment right here. S&P 500, 652 in the pre-markets. We got 3 minutes until the market opens. Open door, 8.5%, 647. That one is up. Broadcom, 14%. Absolutely incredible. Palantir, 158. Again, I'll talk more about Aipcon towards the end of the show. Robinhood's up 2.36%, 105. Maybe we get into the S&P 500, maybe not, but it will be very exciting to see what happens. Lululemon, let's talk about that real quick. Down 20%. This was ugly. This was ugly. They grew 4%. And they guided for like 3% growth. I think they continue to cite that tariffs are not the best thing for their business. And well, the market basically looked at that and said, why should we pay for it? So these are prices we haven't seen on Lulu since 2018. It is not going that well for them. And anyone who thought it was a trade going into the earnings, which a lot of people did think there might be a trade right here just based on a variety of mechanisms, the trade's just not working out. CEO said the competitive landscape is different today than it was 2 or 3 years ago. And while no single competitor is having a meaningful impact on our business, there are now many players in the market, AKA competitors are having an impact on our business. The primary cause is that we rely too heavily on some of our core franchises along lounge and social for too long. We do not have the appropriate balance between existing and new styles across our casual offerings, and the guests stopped responding as they had in the past. If I was a consultant for Lululemon, I would just tell them it's not about your styles. It's not about your TikTok strategy. It's not about any of that. It's 2 things. Number one, those damn pants cannot be costing $115. Like we need, like, can get them, give it a little more reasonable on the pants. Maybe like 85 instead of 115. Number 2 is you guys messed up because there was a very attractive woman who was up for bidding that you could have tried to get on your marketing campaign, but American Eagle got her instead. Sydney Sweeney, American Eagle reported earnings yesterday as well, 40% up. The CEO said Sydney Sweeney is the best marketing they have ever had in their life. So, I mean, when you got Sydney Sweeney allowing American Eagle to go up 40%, and then you have Lululemon that really cannot catch a bid, obviously it's showing the difference in terms of what's going on right here, and that's why that stock is getting some momentum. All right, folks, here we go. It is 9:30 a.m. The stock market is now open. the YouTube chart we recorded a long time ago. Here we go. The stock market is now open. All right, let's get into it. What do we got going on? Here we go. Wake your asses up. S&P 500, 652. That is at an all-time high, 652 on the S&P 500. Tesla, 349.80. That's green, up 3.5%. NVIDIA goes down. NVIDIA gets hit based on Broadcom. That Broadcom news, bullish for Broadcom, not bullish for NVIDIA. 167.54. Bitmine, that's up 3%. Ethereum 4,400. Bitcoin 113. Tesla 350.26. S&P 651.76. Open Door 651. That is up 9% after going up 16% yesterday. Looks like it's not stopping at all. Volume is already 40 million within the first 10 seconds of trading. People are buying up Open Door and they are not stopping. Broadcom right here, 351. That's up 15%. Palantir, 158, 1.2. Robinhood, 104.76. Again, S&P 500. I don't know if it happens today. Not expecting it to happen, but let's see if it ends up playing out. Amit is going to get a call from the front desk because he is so loud and everyone is trying to sleep. That's probably true. Everyone is probably still trying to sleep right here. Grab, 510, breaking from 490s yesterday. That's green. SoFi, 25.69. Google, 233, all-time highs. On the Googs, not too bad. $2.8 trillion market cap. Lululemon, my goodness, 19%. They should have got Sydney Sweeney. They should have got Sydney Sweeney. That is an ugly, ugly red candle. This is worse than 2018 prices. That one's down. MicroStrategy, 332. That's up. AppLovin, shout out to them. Crossing 500 for the first time since February. Street likes it. By the way, bullish Broadcom, not bullish AMD and NVIDIA. Again, I don't know the mechanics on ASICs versus GPUs and if Broadcom is actually going to take away market share from AMD and NVIDIA, but the market, at least so far, is thinking that could be the case. AMD down 5%, NVIDIA down about 3% right here. Where is Broadcom? Are we at 350? We are at 349.70. That is now a $1.65 trillion company based on the headlines they put out yesterday with OpenAI being a new customer for them to the tune of $10 billion. Tesla is green, up 4%. I think this makes a lot of sense. You got a lot of new people probably buying Tesla stock today because if Elon's going to take it to 10 trillion, they're going to try to be along for that ride. Right now it's at 1 trillion. That's a 10x, probably a very attractive investment. And so you got Tesla right there at 351. That is green. That's up about 4%. Open Door 650. That's up 9%. S&P 651.85. That is all-time high, folks. That is all-time highs, which is incredible to see and exciting to see, given that we were at 632 on Monday. UNH is at 310. Oscar, by the way, I don't know exactly why this broke out yesterday, but it went from 16 to 18. I would just probably argue the fundamentals. I mean, unless there was some major piece of news, but retail has done a phenomenal job analyzing this company. And although I'm not in it because I just don't understand healthcare that much, when we did our deep dive 2 months ago at $12, you know, most of us agreed on that deep dive, including Steve, who wrote an entire article about it, that $11, $12, it was probably cheap. And as a result, it's likely getting some momentum right here. So 1882, that's up 2.37%. If you've held on to Oscar, DC8 into it, congrats. That one is green. Apple 240. Wow. Apple 240. Last time we've heard Apple, or last time we saw Apple at 240, we were at March 2025. March 2025. So it's been a while since we've seen Apple at that 240 level. Oracle, by the way, I was talking to someone yesterday and they said Oracle is the actual winner when it comes to AI. They were like, dude, it's Oracle. The highly specific focus that Oracle has on the cloud is going to allow them to really have the ball in their court when it comes to competing with a lot of the hyperscalers. And so yeah, it was just some random person I talked to yesterday. We were talking about the stock market. He was like, I think Oracle is the main winner right here. And I know a lot of people believe that as well. As you know, a lot of you guys have Oracle. The stock went from 118 to 230 over the past 5 months. It's been incredible. But it's probably going to be Oracle, Broadcom, NVIDIA, Amazon. All these guys are likely going to win, which realistically means the NASDAQ, right? The QQQ is not the craziest bet to have over the next 5 years if this AI revolution does continue. SoFi right here, 2570, that's up 1.2%. SMR, that broke out a couple days ago as well. That's up 2.5. Grab right here at 509. I don't think there's any major news on Grab, so I'm not sure why it broke out yesterday, up 3-4%. But it's holding above the $5 range. Obviously, I do think Grab's undervalued. I think fair value is closer to $10, but Grab right here at $5 right now. Tesla 350, Bitcoin again 113, Ethereum 4470, and then Bitmine 44. If anyone bought the dip yesterday at that 41 range, congrats. I don't think it deserved to be there. Maybe it gets back there, but the NASDAQ listing requirement rule did not seem like the major reason why Bitmine should go down. Figma had earnings and they weren't that good. There was actually a couple companies that had earnings down 4%. Figma is now down from 150 to 50, probably a much more reasonable market cap for Figma to be at 25 billion versus I think it was almost at 80 billion. So if you sold anywhere near the top, congrats. But they're profitable. They're just not as profitable as the street expected. Street wanted 8 cents. They came in at 0 cents. So they're not losing money, but they're not making a ton of money. And that's why Figma is down about 15% over the past couple of days. HIMS, where's that one going? Down 47.70. HIMS was up like 4% yesterday, though. So even though that's down 1% right here, it was up 4% yesterday. Tesla still at 348, SoFi 2590, trying to go for 26. AppLovin at 500. Where is Palantir? By the way, Palantir signed a 5-year extension with Lear yesterday as well. That was announced. And I was actually speaking to one of the gentlemen at that company. And one of the stats he gave me was like their monthly active users, which I think was disclosed as well on the press release, is up something like 50% year over year, based on when they first met Palantir back in March of 2024. So the usage that Lear is getting, Lear is also a public company, in terms of the people adopting the workflows that they've created. They had 30 workflows last year. They now have 300 workflows this year. And their users are at the tune of like 12,000 versus like 1,000 last year. So it's growing like crazy. And that's why they signed a 5-year extension with Palantir. So you're starting to see a lot more of these enterprise AI adoptions take place. And obviously that's having an impact on the way Palantir is growing their business. Tesla right here at 350, S&P still 651. Norwegian Cruise Lines. That one's moving a little bit. Carnival Cruise Lines is up a little bit as well. NCLH, that one is also green. That's up 1.82%. Duolingo, just ugly past 48 hours, 267. I don't know why that's down. Unless I mean they didn't report any results or anything. I think this is just the general AI is going to kill Duolingo stuff. And there you go, 268. It is ruining my stock draft. We'll look at the update in a second, but I mean, this is the single reason why I might end up last in the stock draft, is this one freaking stock. So this one now down 2% of the day, just getting absolutely destroyed. I mean, it's getting more attractive, I'm not going to lie, but still from 500 to 268. I mean, talk about a narrative that has just been demolished on Duolingo. Tesla right here at 350, Open Door 656. That's still holding up 10%. That is green. Nubank, that is 15. Wow, this was $11 3 weeks ago. 11 to 15. Not too bad. Not too bad at all. And that's getting some momentum. Amit, would you buy the Klarna IPO? That's going public next week, I think. I am not going to be partaking in that. I think the IPO will do fine because it's IPO season. Lulu, by the way, down 17%. Google, new all-time highs, 234. Absolutely incredible. Again, we're really seeing this bull market start to diversify into some of these other names that haven't caught up. But in terms of Klarna, I don't know if buy now, pay later is the most exciting business to invest in long-term. And short-term, I think it'll be a good trade, but Klarna is going public. They weren't going to go public. I think they realized the market's so hot, they have to go public. And to me, that's a little iffy. But in general, I think if you get shares, I think it'll pump. So like, I think the IPO will do well. I just personally am not going to partake in it. And we're just going to see if they can then keep up the earnings growth. Again, Figma, IPO did great, went up 5x in a day, stayed up 5x for like a week, and now it's back down to normal. Same thing could happen with Klarna, but that does mean there's money to be made in the meantime as Klarna goes up. AMD, is NVIDIA about to go below 4 trillion? AMD right here is down 5%, 250 billion. NVIDIA is, NVIDIA is $60 billion away from going below 4 trillion. I mean, dude, that would be pretty incredible. That would be pretty incredible if it's because of Broadcom. By the way, this is the Palantir press release with Lear, that 5-year extension. Again, they say right here, more than 11,000 Lear employees are leveraging Palantir's technology to drive efficiency and innovation. That is up a decent amount from last year. And the reason I'm highlighting that stat is because, again, a lot of people saying, well, AI is a bubble, there's no actual ROI. 11,000 people in a public company that employs 170,000 people, ticker symbol LEA on the New York Stock Exchange, are using Palantir. AKA, they're engaging with AI every single day. I mean, like, it's just, there's a lot of enterprise adoption happening, and that's something that cannot be ignored. And that's why I think some of these stocks are getting a bid. Snapchat right here, that's at 714. The Qs are at 579. Google trying to go for 235, baby. 234.60. NVIDIA, though, the story of the day, lagging right here, down 2.5 based on based on Broadcom. Okay, so I'm going to do a poll in the chat. By the way, 62% of you said Elon will hit the $8.5 trillion milestone. Let's do a poll right here. Is the Broadcom news actually bearish NVIDIA? I will see if Jose is free. Maybe we can call him onto the show as well, because I would love to get his thoughts. I'm sure he's just digesting this news, and I'm pretty sure he's going to say it's not bearish because he understands a lot more about ASICs versus GPUs. But I mean, the market's assuming it is, and as a result, you're getting some pain. Now, is it DeepSeek type of bearish, where it's just like really, really stupid, and does NVIDIA's price get really, really stupid as a result of that? I don't know, but you got 2% down on NVIDIA based on this. AMD right here down 4.4%. Palantir again 156. Macy's is up a little bit. Dollar Tree's down a little bit. Hut 8 Mining, that's up. Gold still going green. Snapchat 714. Where is Rocket Lab and ASTS? Rocket Lab. By the way, why did Rocket Lab fall 12% 2 days ago? I have no idea why. I mean, I'm not complaining about it because Rocket Lab's done great this year. Done great since the April lows. So I mean, like, I don't think Rocket Lab needs to go to 50, 60 anytime soon, but it just randomly fell 12% in a day, unless there was some news that I missed. It's recovering a little bit right here, up 2.5%, but that one is now a little green. And then ASTS, that one 4204, that is also up 1%. Oh, Jose's on vacation. There's no way. Yeah, he tweeted a picture. Look at him. Look, bro, he's committed to the grind. He was doing a video last night. He was in his hotel bathroom with his setup. Yeah, so he's probably not gonna be able to join because he's on vacation. But I don't know. Feels a little weird for NVIDIA to be getting hit this much off news that to me just expands the pie for everybody. U.S. Senate Democratic leader Chuck Schumer says Democrats will force votes in coming weeks to reverse Trump import tariffs, citing Friday jobs report as a reason. Okay, so whether it's the Democrats trying to stop the tariffs, whether it's the U.S. District Appeals Court trying to stop the tariffs, I do agree with Trump in this respect, and I think he said it yesterday, that if you were to get rid of the tariffs, like completely, all of the deals that they made that were contingent on the tariffs, aka Europe investing $700 billion in the United States into liquefied natural gas and overall private investments, because of their tariff rate going down, like if you get rid of the tariffs, there's no negotiating or bargaining chip to bring that money back into the United States. So I think Trump has a point, which is just like, this would be disastrous for all the deals they set up because like those deals are contingent on the tariffs. Palantir now going red right here. S&P 500 still at 652. And I don't think that would be the best thing in the world. So I know there's still a lot of deals that haven't been done yet, but for the ones that we did get done with Indonesia and the Philippines and South Korea and Japan and Europe, I would imagine those rely on tariffs because I don't think Europe's coming to the negotiating table if tariffs were not a legal way that Trump could have used to bargain. S&P 652.05, high of days. So I don't know. We're going to have to see. But this might get a little messy in terms of the courts going back and forth. If it does go to the Supreme Court, I think Trump's going to win. Tesla is winning as well, 353. That's up 4%. But I don't think the Supreme Courts are going to strike them down. I think Trump's going to have enough of a political agreement on his side based on the split of the court to allow the tariffs to go through. Tesla right here trying to break out to 355, 353.89. It hit 355. It hit 353.99. Did not break 354 yet. And then Google is 235. Google is 234.67. The other one, Goog, is at 235. So basically, we are at 235 on the Googs, all-time highs. I mean, what a story with Google, right? 145 to 235. Nice little 40% move in basically 2 months, but you have to stay with 140 for basically 2 years to get that 40% move. So quite incredible for everyone who's been deeply into it. And then Tesla right here, trying to get to 353. Broadcom selling off a little bit from 357 to 344. Up 12%. S&P announcement is 5:15 p.m. Eastern. 5:15 p.m. Eastern. I likely will be live for it. By the way, I think I did confirm that it's definitely happening based on our boy Evan, who posted about it. So this is the summary of the, by the way, SoFi signed Josh Allen, quarterback for the Buffalo Bills, with a new partnership. So I don't really know who Josh Allen is, but seems bullish given he, I think, is very relevant in the football world. And so, yeah, that could be good for SoFi. But Evan tweeted a summary of all the companies that got into the S&P 500 over the past couple of months. And the first Friday of every September is when they announce it. So likely 5:15 p.m. Eastern, I'll be live. Maybe Tanner will be live with me. And we'll be trying to see what's going on. These are the companies that got in over the past 2 years: Square, Datadog, Trade Desk, IBKR, Coinbase, Williams Sonoma, TKO Group, DoorDash, Apollo, Workday, all those companies. Lululemon back in October of 2023. I mean, there are some companies I think that probably don't deserve to be in there anymore, but we should get an update later today, and we're going to see. Okay, apparently this Josh Allen guy is really important. Best quarterback in the league. He's better than Patrick Mahomes, really? Isn't he like the GOAT or something? I know he lost in the Super Bowl last year, but isn't he like the guy, Patrick Mahomes? I feel like that's everyone who doesn't know football. They're like, oh yeah, but the Chiefs, right? The Patrick Mahomes, like they're just like that's your go-to when you talk about football. It's like, well, yeah, Mahomes, he's the best. So, look, I don't know Josh Allen, but I guess in the world of sports, if he's big, then that's good for SoFi. That's good for SoFi as they're continuing to get their brand recognition up. Deneen says I'm up 49% in Google, bought March 2025 when it dipped. Congratulations. You deserve it. For anyone who heavily bought that Google dip, this was a company that is one of the most important companies on the planet. Retail spent a lot of due diligence analyzing it in the face of some of the institutional guys really poo-pooing on it. And a lot of people made a lot of money going heavy into Google, which is pretty incredible. So this one, I mean, look, my Mag 7 pick for the year was NVIDIA. Again, my average is 122, and that's kind of been my core Mag 7 pick. A lot of you guys picked Google. I mean, I remember back in January, February, we were having conversations on the Market Open, like, what is your Mag 7 exposure? I remember I was asking polls, and one of the number one things I got was Google. There was a decent amount of Teslas. There was some amount of NVIDIAs. There was like, a lot of you guys own Meta, but I don't think Meta was like your core exposure to the Mag 7. There was barely any Apples. There were some Amazons, but realistically, it was NVIDIA, Google, and Tesla. And Tesla's not really performed that well. NVIDIA's done very well. And Google now has just caught up. So you had to kind of go through 9 months of just waiting for this thing to move. And now it has made its move. Robinhood going down on the day. That's down 1%. Lulu still down 16. SoFi down 0.2. Grab still holding green. Marvell up a little bit. MicroStrategy's up 2%. SharpLink Gaming. SBET has been a disaster in terms of Ethereum treasuries. I'm sorry, but it has been. And I have no vendetta against these guys. I barely know anything about the management or leadership here. I know the BlackRock crypto guys there and the co-founder of Ethereum, all that stuff. But I mean, this thing has just not been able to get a multiple. And I don't know. I saw a lot of posts yesterday on Twitter of people saying they're just ditching SBET for BMNR because they think that the multiple is going to be with Tom Lee. So we're going to have to see how that plays out. Obviously, if Ethereum goes to the moon, hopefully that doesn't matter. But as of now, it's just not being able to get a multiple. And if you don't get a multiple, it's hard to dilute and then make that ETH per share accretive versus dilutive, which is the biggest thing about these treasury companies in terms of maintaining their MNAV. American Eagle down 3% even after those good earnings. Lulu again down 15%. Amazon slightly flat on the day. S&P 500 still holding 650. Opendoor up 11% on the day. I mean, I think what's happening with Opendoor as well is just now that the momentum is here, it's going to be very hard for the momentum to go away. So again, my thesis on Opendoor has always been it's a bit of a gamble. And if you're ready to gamble some money, then you can gamble some money. For those that believe it's not a gamble, that it's a legitimate investment, then you're doing well. And the question is just, will the board be able to appoint a CEO that is going to be able to take the stock to the promised land? I think a lot of retail is buying it up on the anticipation that the board will do the right thing, which, to give them credit, they've canceled their 10b5-1 selling plans, right? So they're not selling stock. Some of the board members have bought more stock on the open market. And they launched something 2 days ago called community.opendoor.com, which is like this hub for investors to like get more information about Opendoor. It's not the most transformational thing in the world, but it's like an attempt to say, hey, we hear you guys. We want to communicate with you guys. We want to embrace the new retail army that has, cared about Opendoor. The question is, can the business actually turn around? And, they're growing 5% year over year. They're not profitable. Their margins are still shit. Like the question is, can they actually get that to turn around? And if they can, I mean, look, it's a $5 billion stock. For this to become 10, 15 billion is not crazy to see. The question is just, will management be able to do that? And do you have the stomach to like hold the stock in the face of that? I personally don't, which is why I'm not in it. But if you do, and this thing ends up turning around, then, you know, we get more than 25 rate cuts towards the end of the year. Maybe that also is the catalyst to really help Opendoor long-term. Tempest AI right here, that's up 1%. Disney right here, that's up 0.5%. Google still trying to push 235. Tesla, 354. Did not hit 355 yet. We got about 40 cents in between. Let me check resistance on Tesla, 355. But that one's green. And then NVIDIA still down about 2% on the day. Is the CEO still showing up at Drake's house? I believe he is, which who knows, maybe Drake ends up buying it and that really takes it to the moon. But again, every time I really look at Opendoor content, it's about the stock. It's about 82. It's not about the company. That is why I'm not interested in it. I mean, there's a lot of retail movements that are always about the stock. Some of those work, some of those don't. I personally just don't want to have my brand associated with something that's really rooted in the stock price, not the company. But if the company turns around and the stock price has momentum and people are going to diamond hand their shares, I mean, this thing's going higher. If no one's selling, it's very simple. If no one's selling and there's a fundamental turnaround, Opendoor is going higher. And so you either believe that that could happen or you don't. But if you do, you've been rewarded so far. And if you think it'll go in the future, then, you know, you can buy it $6 and maybe it gets to 12. The question is just going to be, can the board actually turn around the company fundamentally? But look, if Opendoor does get that momentum, we're probably in a pretty aggressive bull market. I mean, hopefully it's for the right reasons. Tesla, by the way, 355. Wow. I didn't even get to check resistance. I'll check for 356, but she is moving. Hopefully Opendoor turns around for the right reasons and it's not just like some hype-driven catalyst momentum towards the end of the year. But if it does turn around for the right reasons and you've got momentum and you've got rate cuts and you've got overall Q3 earnings growth, I mean, you're probably seeing S&P 500 closer to 6,700, 6,800, which is Tom Lee's target. And that means a lot of these stocks that we all own are probably going to end out the year higher, especially if the labor market does not collapse, which is the nuance here. And that's good because that'll allow us to, you know, have a good 2025 in position for 2026. 356 resistance, 35,000 shares. 35,000 shares on what is it? On Tesla for resistance. So that's what we got to get. Now, Grab, again, I wouldn't call this a super, super big breakout, but it's up from 490 to 514. So that's nice to see. I don't think there's any major news. I can't report any big thing. The one thing I can report, and I know I sound like a broken record saying this over and over again, but there is no insider selling, bro. And I've observed Grab's insider selling for the past years as I've been analyzing the company. They tend to sell like every month, bro. These guys tend to cash out every month, at least 500,000 shares combined within the C-suite. They have not sold since July, and when they sold in July, it was like 100,000 shares. It was a small amount in comparison to their previous insider selling. So it's one of those things where every day when I check the insider selling, and like, by the way, the stock has been the highest it's been in 3 years. So it's not like, you know, the CEO, the C-suite's not looking at the stock and being like, hey, this is, you know, we probably got our shares at 50 cents, stock's at $5. Stock was stuck at $3 for the longest. It's way above $3. You know, we should take some profits, but they're not doing it. And to me, it's because I think they know they're getting ready to use their cash pile, or they're getting ready to report some growth quarters that are going to be pretty substantial. And they'd want to sell the stock at $6, $7, $8, $9, $10 versus at $5. So we got to see how that plays out, but no sort of fundamental catalyst on Grab. Anthony Tan did do a new interview. I'll link that in the chat. It was a great interview. It was about 25 minutes with a new channel. I didn't know he was that open to doing podcasts. Maybe I should reach out and actually try to do a podcast with him, because it was some random podcast on YouTube that he hopped on for 30 minutes. So I think it was pretty good performance on that podcast as well. Google right here, trying to break 236. Let me check resistance on that and see if it can break through. AMD still down 4%. NVIDIA down 2%. Broadcom still up 12%. 236 on Google is going to be about 4,000 shares. 4,000 shares at 236. Not a lot of resistance. Not a lot of resistance. A lot of selling on BMNR. Let me check the volume on that. That was at 44.50, now at 43. Again, this one's volatile. Like as I've gotten into the stock, like I've been mainly buying Grab for the past couple months. There's like zero volatility. Started buying BMNR 2 weeks ago. I'm like, oh, this is what volatility feels like. Like this thing goes up and down, which makes the covered calls juicy. But it also, you know, emotionally, you just have to be ready to deal with the stock going up and down. So it was at 46 2 days ago on Wednesday. Then it went down to $40 yesterday. Now it's at 43. I mean, you've got to have a long-term thesis on Ethereum to hold this, because otherwise the volatility of BMNR itself is going to be hard to handle. But again, the volatility is actually a good thing for the stock, and long-term that volatility should be to the upside if Ethereum works out. Lyft right here is up 4%. This one definitely breaking out over the past week, up almost 15%. Tempest right here, 79.19. Reddit as well, 237. That's up 2%. A lot of these high beta names getting a little bit more of momentum. Oscar, is that one trying to go for 19? Oscar, 1888. Let me check resistance on that. Again, Google, very close to 236. Literally a couple thousand shares away. Oscar is 12 cents away from 19 Dolores. Are we at all-time highs talking about rate cuts? We are, because the labor market came in worse than expected today. 19 is 2,000 shares, guys. 2,000 shares. So Oscar, not a lot of resistance to get to 19. Look, it makes sense in general. Hey, how are we talking about rate cuts at all-time highs? I get it. But then you look at this labor market report, and it was 50,000 jobs less than expected. I mean, that goes in line with the 250,000 jobs we revised to the downside a month and a half ago. I don't think we should wait to see us losing 300,000-400,000 jobs a month for us to cut rates. Like, I think any logical person can say, regardless of what's happening in the equity market, which again, the stock market is not the real world. The stock market is this imaginary world that we all get to play in every day because we somehow found out about it. But the real world is like what actually matters. And the real world doesn't care about NVIDIA going down 3% because of Broadcom's chips. It cares about how many people actually have a job. And if you're seeing some of these labor reports that are not good objectively, then I think J-Powell and the Fed can't ignore that regardless of what's happening in the stock market, we probably need to give some relief to the economy and make sure the average small business can afford to get a loan so that they don't have to fire their employees because their cost of capital to borrow to set up a new laundromat is way too expensive. So I think rate cuts are coming. The question is just going to be how the market deals with it and if the earnings can keep up in the midst of those rate cuts. S&P still holding 650.9, down from 652. Palantir and Hood do go red. NVIDIA still red. Palantir down 1%. HIMS down a little bit. American Eagle down 4% on the day. SharpLink Gaming, that's down 1. Marvell, that's down 1. SoFi, that's down 0.2. Palantir down 1.19, 154.35. Hoodie down 1.5, 101.33. So all of those are starting to go down as well. ASML 778. This one is set up to get back to all-time highs. Is it really back at 770? Really? Wow, dude. ASML up 4%. This has to be the market thinking that Broadcom's chips are going to need a hell of a lot of lithography. And ASML is going to be the winner there. This thing, over the past 6 months, the low is 562 in April, but then they got to 824. Then they had a crappy earnings. This went down to 682. Now it's 780, not that far away from all-time highs. Not all-time highs, but 5-month highs. I think all-time highs is like 1,000 or something. What's the all-time high? Yeah, 1,096. That was back in 2024. Not too bad. Not too bad for ASML. Wonder why VRT is down. So all the energy plays seem to be down today. VRT, that's down 2. GE Veranova is down 3%. This one actually got beat up over the past couple of days, to be honest. It was at 609. And then VST, is that one down as well? Yeah, that is weird. Why are the data center plays down on the Broadcom news? Because I would imagine, I mean, they're down, maybe they're following NVIDIA, but even if they're down because of NVIDIA, shouldn't they be up because of Broadcom? Unless Broadcom's not going to need that data center usage as much as NVIDIA, which I don't think is necessarily accurate. Trump's talking about Epstein on Truth. Okay, what is he saying on Truth? Let's see. But yeah, not sure why the data center plays are down. Oh boy. He's writing a lot. Dude, I'm not even going to read this whole thing because it's like 4 paragraphs. But the words I'm seeing right here is that Democrat hoax. That's the gist of it. I'm not going to burden you guys with reading this whole thing. But basically, he's saying this is a Democrat hoax. There's a lot of hoax in this Epstein tweet. I think the reason he's saying this is because the Democrats are coming out with some legislation that's going to require the mandatory disclosure of the Epstein files, along with there are some Epstein survivors that came out and said, we are going to be releasing our own list soon. That news came out 2 days ago. And so the media coverage on this has not been as heavy as it was a month ago. It looks like it's coming back. And as a result, Trump is trying to probably front run that by claiming it's a Democrat hoax. So yeah, that's what he's tweeting about right now. 42.73 on Bitmine, Nvidia 167, Broadcom losing some steam. It was at 357, now it's at 339, but still up major on the day. This is what Goldman Sachs said today about U.S. equities, kind of similar to what we've been talking about in terms of, is there a bubble or not? Among the largest stocks, valuations are still below the levels reached during 2000 and 2021. The 5 largest stocks in the index, NVIDIA, Microsoft, Amazon, Google, and Amazon, trade at a PE multiple of 28 times compared with 40 times at the peak in 2021 and 50 times at the peak in the tech bubble. That sentence right there, I thought was one of the most important things that Goldman said this morning, because again, when everyone says bubble, wait a second, you don't get to trade at a 28 times multiple versus 50 or 40 in the previous tops in 2000 and 2020, 2021, unless your earnings growth is strong enough to constantly reduce that multiple, which every quarter, NVIDIA, to say the least, is the one that's really bringing down their multiple, which is why Costco now trades at a higher multiple than NVIDIA. They were kind of at the same before this recent quarter by NVIDIA, because the multiple keeps going down because NVIDIA keeps putting up amazing numbers. So you're not really at that peak bubble euphoria in terms of multiples on the biggest names. In addition, because given real yields are more than 200 bips lower today, the yield gap of the largest stocks is 4 bips higher than the peak of the tech bubble. However, there are some larger stocks, such as Tesla and Palantir, that trade at more elevated valuations, 151 times and 200 times respectively. In addition, there are some smaller pockets of the market showing more signs of optimism. Our speculative trading indicator shows a pickup in trading activity among expensive stocks, unprofitable stocks, and penny stocks, albeit below levels from 2021 and the tech bubble. Basically, Goldman is saying, yes, there are people that are trading speculative names, but that doesn't mean that the most important names that matter, which at the end of the day are Microsoft, NVIDIA, Amazon, Google, and Meta, those companies are not trading at euphoric levels. Again, Meta was a $1 trillion company in 2021. It made no sense. Now Meta is a 2.2 or $1.97 trillion company, and one could argue it makes a lot of sense, and it's probably cheap. $1.9 trillion for Meta, trading at 27 times. It's just a different world in terms of how we're thinking of overall valuation. All right, are we getting some reversals on the market? S&P is about to go red. It's $1 away from going red. Hoodie, are they taking them down? Wow, they're taking them down. All right, so either this is a head fake before S&P inclusion, or it was leaked that Hood is not getting into the S&P 500. And as a result, they're getting hit. Now, granted, I didn't think they were up this week because of S&P inclusion. I don't think that's the reason it was going up. But it could just be algos going back and forth. Grab is still green. Open Door is still green. Google still green. Tesla still green. But a lot of these other names, NVIDIA, AMD, Palantir, Hood. Let's see, is AppLovin. Palantir's down almost 2%. AppLovin is now also down 3%. You're seeing a reversal in high beta, but not all high beta, selectively high beta. Could MicroStrategy get into the S&P 500? I think they could. I am a bit skeptical that the committee wants such a heavily leveraged Bitcoin play in the S&P 500. Like, it's kind of hard for me to believe they actually would let these guys in anytime soon. Maybe I'm wrong. But maybe they get in today. And if they get in, that would obviously be very bullish for MicroStrategy. I just don't know if the committee would allow them. Doug says, I'm buying this Hood dip. My Hood covered calls are printing, says David. It's weird, dude. They've been like, they gave us 120 or 118, and then they just took us down to 97 to 105, and that's been the range, which has been great for covered calls. But it is quite funny to me because it's not like much has changed over the past month. If anything, only, better metrics have been released by Robinhood. By the way, next Wednesday, we get the August metrics, I believe. It might be Tuesday. And I think those metrics are going to crush. Speaking of Open Door, I think Open Door has played a massive role, and I'm not kidding about this, about trading volumes on Robinhood. I think a lot of this, I'm just the screenshots I've seen of people that are up like $3 million on Open Door calls, literally, I'm seeing those on Robinhood. So I would imagine that and Ethereum alone in August also the S&P was up 4%. Like all of that put together, August should be a hell of a month for Robinhood. Even if September disappoints, Q3 should be a banger. And we just got to see how it plays out. Grab up 3%. All right. Getting a little bit of love right here. 518 from 490. Maybe some money rotating out of high growth and trying to get into something safe like a Grab, trading at 40% cash. But that is up about 3% on the day. UNH, is that one getting some love? UNH is 315. That's green. We haven't seen 315 in a while. I think this is higher. This is the highest it's been since the Buffett news came out. So nice to see UNH getting back above that 315 level. Let's see. Is it a good time to buy Hood at 99? I mean, look, I think my price target is still 120 by the end of the year. But look, the thing about Hood at 99 is like, I think it's cheap given their growth, and I think they will expand their multiple. But if they compress their multiple for any reason, whether it's their quarter or whether it's the macro, then this thing could drop from 99 very quickly. Like, I don't want to be naive about the fact that, you know, that multiple, that beautiful multiple they have on their stock can get cut in half if something really bad happens to the company in terms of their earnings or the macro. Now, in terms of their earnings, I'm very confident Q3 is going to be a banger. I don't think there's going to be anything that happens there. In terms of the macro, I mean, I don't know, but based on the labor data we got today, based on rate cuts, I don't think the macro would be non-conducive to Robinhood. So do I think it's crazy to be buying at these levels? Absolutely not. The question is just knowing that, look, it's up 3x in 5 months still, and obviously it could get hit if there's any long-term macro issues. But if we end out 650 on the S&P, even if we go down to 647 on the S&P today, I mean, we are ending out the first week of September. And let's just say we can say we survived the first week of September. I mean, even if we fall down to like 645-ish, which would be down 1% from here today, first week of September, not down 3-4%, I think is a win. Basically staying consistent where we were in August. And maybe we can build on that momentum going into the end of September. I think Hood is expensive here. The multiple is aggressive, but long-term you can still do very well. Yeah, I agree. And if you think it's really expensive, but you still want to own it, then sell some calls and reduce your cost basis along the way. It's just, do I see Hood going back to 75? It's like, no, dude, that's hard for me to see that. There's too much growth. There's too much momentum. There's too many dip buyers. Like, that would be very tough to see, but obviously anything is possible. NVIDIA, wow, 165. They are taking her down today, dude. Down 3.4%. All right, let me pull up my portfolio. I haven't looked at my portfolio all day. This will be my raw reaction to. I'm gonna guess I'm down like 70,000. I'm gonna guess 70,000. Oh, that's not bad. It's 43,000. Okay, it's not. It's not as bad. I thought it'd be worse. NVIDIA and Hood and Pounter, all three of those getting hit today. Rock Lab a little green. Grabby Grab giving me some love today, up 3%. And then Bitmine as well just went red, 4206. That's down as well. NVIDIA is down because of the Broadcom news. Let's see if we can get some more coverage on that stuff, but I don't know if they deserve to be down on it, but the market is saying they do, and we're going to see if dip buyers end up stepping in and potentially taking advantage of some of the pain that we're getting. Let's get a little bit of coverage on this jobs data, and then we will keep going from there. I'll try to see some stuff that we could find on NVIDIA and AMD.
You know, about 200,000 at the end of 2024. So we've really seen a deterioration in hiring. June, here was the key, was revised down by 27,000 from 14,000 to a negative number, actually negative 13,000. July was actually revised up. But if you take the revisions together for both months, 21,000 fewer jobs than what we expected. And there you can see what the last few months look like in terms of job creation. Unemployment rate goes up. Where were the biggest job hits? Manufacturing. A lot of people are talking about. Obviously, that's been a signature of President Trump's administration and his goals. Well, they are losing jobs, 12,000. I think no surprise given what's happening with tariffs, and that sector's been in contraction. They're now down by almost 80,000 on the year. Whole trade employment, federal government. We know these are also areas where there's been pain. Where the job gains have, well, look, Healthcare has been a standout, no question about it, though we are seeing fewer and fewer jobs created in that sector. Social assistance, that's where the jobs are. Education, that's kind of what we're seeing in terms of a bright spot. Just another flag is youth unemployment jumped to 10.5%, so that's a problem too. The good thing about all of this, the rate cut odds move up sharply. September's a lock. Now October looks pretty good in the eyes of the bond market.
These data center plays are down badly, as Austin says right here. Even the companies that build data centers are down, fixed down 5%. They're obviously down because of NVIDIA. But the question becomes, does the market think Broadcom has now created an existential threat to NVIDIA, aka NVIDIA being a metaphor for data centers, and that's causing all the data centers to be down? Either this is really stupid and this dip's going to get bought up, or there's some legitimate problem. I default to the fact of not knowing, but I would argue there's probably not that big of an existential threat because of Broadcom. But that is likely the reason we have for why data centers are getting hit as bad as they are with NVIDIA today.
And in a cut in December, so the bond market is now telling us 3 more cuts. The Fed can go because there's reason to be concerned, as we've been saying here for a long time, about the job market.
Yeah, the question is whether or not next week's CPI and PPI make this even more complicated.
Sure, it would have to be a really outsized, I think, inflation number, because we expect a little bit of upward pressure on inflation because of the tariffs. That's to be expected. But overall, as long as it kind of stays around, 3%, what you just said probably is why. So the market odds have now gone, I think, to 20% that the Fed will cut 50 basis points, a double in September. But the reason it's not higher is because the Fed isn't at its inflation target. I mean, they still have an inflation mandate. But I think the feeling is that they're worried more about jobs and that maybe they were too late to cut when it comes to jobs. Look, tariffs provided uncertainty on the inflation front, but they also provided uncertainty on the demand and jobs front. And so, I mean, they could have cut a few meetings ago to get ahead of this. And I'm not saying that would have necessarily preserved job growth, but to make things easier, that could have happened as the president was calling for. It didn't happen.
Yeah, rates don't filter into the economy in 90 days.
Well,
you know that.
Well, but they filter in various ways. I mean, through mortgage rates, through the dollar weakening. Like there are sort of instant ways that rates filter in. I'm just saying, I think there was a lot of angst and concern about the inflation side of the tariffs, but not necessarily about jobs.
All right, folks, what are we doing? Are we buying this dip? What the heck is going on? They are really okay. We're just going to use Gemini. We're gonna get some answers since we don't have Jose today. All right. So Broadcom just came out and said OpenAI is buying 10 billion of their custom chips. NVIDIA stock is down 3% along with a bunch of data center stocks. Is this dumb? Why would the market tank NVIDIA because of this? Let's see. This feels kind of dumb, bro. Like, really? We're going to tank all the data center plays because Broadcom has some new chips? The NVIDIA moat is being challenged. For several years, NVIDIA has held a near monopoly in the AI chip market as GPUs, particularly the A100, H100's powerful CUDA software ecosystem go-to solution. This dominance has allowed NVIDIA to command high prices. Custom chip threat. The news of OpenAI, one of NVIDIA's biggest customers, developing its own custom chips with Broadcom, signals a direct threat to this dominance. This move is not an isolated incident. Major tech giants like Google and Amazon, which is fair, and Meta are investing in designing their own chips. The market sees a fragmentation of the AI market. Broadcom's expertise in ASICs and networking solutions are crucial for connecting the thousands of chips in a data center, which to me doesn't seem bearish data centers. If you want to say it's bearish NVIDIA, whatever, but it doesn't seem like that's bearish data centers. The market is now seeing Broadcom as a major beneficiary of this trend as more companies turn to them to design and manufacture their custom hardware. Unless the market thinks a lot of those data centers are optimized for NVIDIA GPUs and not the custom ASICs, which is why all those data centers, are built for a world where NVIDIA stays the dominant player, and maybe NVIDIA is not the dominant player now because of this news from last night. The $10 billion order for custom chips represents a substantial chunk of business that could have potentially gone
to NVIDIA. In summary, the market's reaction is not dumb. It's a rational response for a significant development. The news marks a pivotal movement in the AI hardware race. The reason I feel it's a bit weird is because if it was actually an existential threat to NVIDIA, I feel like NVIDIA would be down a lot more. But it's a $10 billion hit that I guess is not going to NVIDIA anymore, and NVIDIA is down 3%. 3% is a decent amount, but this is not DeepSeek, right? If it was DeepSeek, you would see a flush out. I mean, remember DeepSeek, it was down 15% in a day. Like, it was bad. So this feels more like algos reading the news and just saying, okay, Broadcom up, NVIDIA goes down, which to me feels a bit more dumb, even if it's challenging NVIDIA's moat, which, I mean, any reasonable person can say, yeah, NVIDIA might not have a full monopoly on this the way they had in the future or in the past. But I don't know if that means this thing deserves to get hit back to the 150s, 140s. Palantir down 3%, Hood down 4%, all these names taking a hit. I don't have any fundamental headlines that I can tell you guys for why. Hoodie now at 98.60, Palantir at 151. S&P also just went red. S&P still holding on to 648, barely red on the day, but it's down from 652. Google still holding on to its green. Grab still holding on to its green. Broadcom is falling a lot, though. It was at 357. Now it's at 336. That's a pretty big decline just from an absolute dollar basis, even though it still is up 10% on the day. It was up almost 20%. So you are seeing a little bit of pain right there. Reddit is also still green. This just feels reactionary. I agree. Kind of feels more reactionary than anything. To me, it just signals there is a lot of demand for chips, whether Broadcom or NVIDIA is getting it. The point is that demand is there. And one of the reasons people get so scared about NVIDIA is because they're like, well, what if the AI data center build out, the overall demand for semiconductors goes away? And whether it's Broadcom or NVIDIA, if that's not going away, then both should be beneficiaries going into the future. But I don't know if that means a lot of that market cap has to leave NVIDIA and go to Broadcom. Yeah, S&P announcement today after the bell. After the bell, 5:15 p.m. So not immediately, but after the bell, we're going to see. Yeah, let me pull up the heat map. Let's see this right here, and then we'll pull up the stock draft and see what's going on there. All right, so you have red in the semiconductors based on this Broadcom news. You have green on Tesla. You have green on Apple, green on Google and Meta. Insurance is down. Financials are down. Real estate's down. Utilities down. Medical devices green. Kind of a mixed bag. By the way, we didn't talk about Salesforce, but my goodness, Benioff, I mean, I cannot believe he is complaining as much as he's complaining. But I was at the airport when I heard the interview with him and Kramer about the earnings. It was one of the worst interviews I've seen in my life because Kramer was trying to be like, well, you guys missed on the numbers, but the numbers don't matter that much. And Benioff was like scolding him for even bringing up the fact that they missed on some of the numbers. And then Kramer was like, no, I'm on your side, but you also missed on the numbers. So Kramer was doing a weird job because Kramer wasn't taking a side. He was trying to be friendly, but also trying to be critical. And Benioff was like, why are you even being critical? Like, we did $10 billion in revenue. What are you talking about? And then Kramer brought up Palantir, and then Benioff just went off. He was like, well, Palantir, like, what, you know, like, we're doing way more revenue than Palantir. And it's a little weird because he can't get a multiple on his stock. Not because their numbers aren't good. I mean, $10 billion in revenue is incredible for a company of their size. But I think the excitement for a company like Salesforce is not there. And that's kind of why Benioff's getting mad. This was him 2 days ago after the earnings.
And then you see these huge deals that closed in the quarter, including the U.S. Army, you know, where we beat Palantir. It was incredible. Where we have this incredible new mission force initiative in our company.
Well, let's go
We're
over
really
what
saying to the
happened
government. And by the way,
I want to know what happened with the Army contract. You beat, what you say, you beat Palantir?
You need to remember something, Jim.
Okay.
Our government business, the U.S. government, is our largest customer, right? It's a multi-billion-dollar customer for Salesforce. And if we run the Veterans Administrations and the GSA and all these great civilian agencies, but you know, Jim, that there's certain areas that we haven't exactly gone into, and we're not going to go into the details of that, you know, we've left that for others. And, you know, but there are areas in the DoD that we are currently selling to. We want to sell to more of those. And one of them that we did in the U.S. Army this quarter, we had a tremendous success against Palantir because, by the way, our prices are just so much lower. I mean, their prices are just so extraordinary. The cost of Palantir, I'm sure you've seen the price list.
Yes.
It's incredible. But look, we're offering a very competitive product, at a much.
So he was upset, right? And his argument was like, wait, why is Palantir getting all these sales with very expensive products when we're charging way less than Palantir to the US government? And the reason he sounds like he's whining is because it's like, dude, if they're not buying your shit, even though it's 10 times cheaper, maybe they don't want your shit, It's like, so Salesforce, this stock has just been a disaster. And I don't think the numbers are bad on Salesforce. I just think the overall excitement around what they're doing in AI is not there. Salesforce right here up a little bit on the day, 1.6%. But it's not been the best for them over the past couple of weeks. Hoodie is tanking. Haven't seen a 5% day in a minute. I'm buying some shares. I'm buying 25. All right, I'm buying 25. There you go. I got 25, 97.83. 5% down in the day. If you don't have a hood position, this doesn't mean you have to ape in. I have a hood position. Usually when my largest positions are down 5% in a day, it was almost 5.4%. I'll take a little bit of a beating on it, and I'll bite. So probably not the bottom, probably going lower than this, but I put in 25. So we got a little bit of hood right there. BMNR, that one's also going a bit down. NVIDIA 165.99, Palantir 151, App 1148. S&P now is down about 0.13% on the day. Meta 754. Meta still holding up to be green. Again, the data center play is still getting rocked. Grab now 512, Bitmine down 2.7, Opendoor 630, that was at 670, so that one's going down a little bit, but still holding on. Google as well, down from 235 to 233. Did not crack to 236 yet. I think we have a couple other headlines coming in right here. Let me see. Again, the jobs data is bullish because it means rate cuts, but it's also, I guess, the market an hour into the market being open is like, maybe it's bearish, but I don't think the market's like, oh, maybe it's bearish. I think these are a lot of algos coming into play on a Friday, because the reversal we're seeing, which is not even that big of a reversal on the broader market, but on some of these stocks, just seems to be a little bit of a U-turn based on how some of the algos are thinking about it. SoFi right here, 24. Like, why is SoFi down 3.5% when we just basically got confirmation that we're going to get rate cuts? I mean, that's going to be very bullish for SoFi. That to me does not make a lot of sense. I don't think it's crazy for SoFi to maintain 26.27, but it's at 24.50 based on more rate cuts. So I don't know. This is weird. Feels very, very algo driven versus anything fundamental. Rivian right here up about 3.6%. Salesforce up 1.47, and Robina 98.33. Meta still holding on 753. Where's Tessie? We were at 355. Tesla 348. Tesla losing a lot of its momentum. I mean, still up 2%, which is nice, but it was up almost 6% on the day. Amit, I'm up almost 80% of my covered calls. What is the ideal time to close it? Usually, 80%. 80 to 90% is when you take the money. You give back that extra 20% and you close it out. Now, granted, it's nuanced, right? So let's say you have a hood call for 105 today. You're probably up more than 80%. I mean, unless you think hood's going to go to 105 in the next 5 hours, you don't have to close it. But then again, what if it does, right? So you can, to have just some peace of mind, you can say, screw it, I'm just going to close it out right now and move forward, especially if there's only a couple pennies left. But if you have a hood call at like 100, I mean, from 97 to 100, I could see that happening towards the end of the day. Any S&P news, anything bullish, then you would want to kind of close it out right now. If it's a long dated covered call, like NVIDIA, you have a 180 call for next week, but NVIDIA's at 164 already. So like it's down 80%, which means you're up 80%. Then yeah, I feel like you can close that out and not have to wait for the reversal. But it's really how comfortable you are on the stock potentially getting to your strike. And if you're up 80, 90%, usually most people say, all right, let me not get too greedy. Let me take my profits and move on from there. Also, if you're okay with the shares getting called away, then, you let it ride. And if it doesn't get called away, even if it's close, then you can get the full 100% of it. All right, what are we buying? Are you guys buying anything? Put in the chat. Is anyone buying anything? I see some people buying some hoods, some people buying some Bitmine. Palantir, are we below 150? Palantir below 150, 149. Robinhood right at the price I bought it at, probably getting ready to go lower than what I bought it at, 97.70. Tesla 347. NVIDIA low of the day, folks. Low of the day, 164.75. I feel like there should be some fundamental news that I'm not seeing. I don't know if all of this can be chalked up to Broadcom. But I don't see anything too crazy happening. Wow, Bank of America. There you go. Bank of America. Remember, Bank of America has been saying no rate cut for the past 9 months. They just changed their mind. Bank of America, we now see 2 rate cuts in 2025. Likely based on this job report that came out this morning. So Bank of America doing a full 180. They went from 0 cuts to 2 cuts. And the question is now, is that bearish? Or will the cuts along with earnings growth be able to be something the market can withstand to all-time highs? We're going to see. Bitmine getting wrecked. All right, so Bitmine's got to hold 40. Yesterday it held 40. Going below 40, I think psychologically would not be the best to see, seeing that go below. Now, Ethereum's not tanking, so this seems more like algos, high beta stocks all getting hit. Ethereum's, down from 44 to 43, not that crazy. But Bitmine hopefully can hold 40. If it doesn't, and that one's going to see potentially some more pain as well. Some individual names are 100% struggling, but the Qs are still green and SPY's barely red. Yeah, so like the industrials, defensive, those are still holding up. The Qs are still green, probably based on Amazon and Google. If NVIDIA falls another 1%, the Qs are definitely about to go red. Palantir 149, and then Hoodie 98. Let's see if this is kind of, is this the bottoming part of this Friday, or are we headed a lot lower? We're going to find out. But it's not like it's as aggressive as it was back on Monday. Open Door losing a lot of its momentum, still holding above 6, which I think is bullish. Grab still holding above 510. Google still holding 230, but you are seeing some red candles right here. I see a lot of people buying AMD in the chat. Okay, I see a lot of people AMD. People bought Figma. Yeah, likely most of the job for Iran. How's that one doing? This is a data center play. This one down 3%. Still up 20% from last week. I see some app loving, some hymns. Nike, we haven't looked at Nike in a minute. Nike 74. Nike basically up from 62 where it was at before earnings. So Nike still holding strong. AMD, this one is interesting. This one's getting hit worse than NVIDIA, down 7%. Obviously, their moat compared to NVIDIA's moat is not as large. But it looks like this Broadcom news is upsetting the entire chip sector. Okay, Jose just texted me back. I'm going to say I can just call if that works. Yeah, he doesn't have to hop on StreamYard. Okay, so we might have Jose join in like 5 minutes potentially. And we'll get his thoughts. But it looks like that is, again, causing pain. Why is it that Broadcom is bringing us down? So they signed a $10 billion deal with OpenAI to buy custom ASICs, so different chips. I am not educated enough on ASICs versus GPUs to know how big of a deal that is for NVIDIA, but apparently the market is acting like that is a big deal for NVIDIA. Jose, what's up? Good morning.
Hello, my name is Jessica, an assistant to the director here.
Okay, that was not Jose. Never mind. That was Jessica. I thought that was Jose. I was getting a phone call after I texted him. I'm like, okay, that's Jose. That is Jessica. You guys didn't need to hear about that. Jessica's, me and her got something going on the side. She wasn't meant to call like that. But anyway, Palantir right here, 148.57. That's down 5%. Ethereum 4,300. Salesforce catching a little bit of a bid. NVIDIA still down 4% on the day. Amidst AI girlfriend. Oh my gosh. That was the dentist, bro. That was the dentist. Oh boy. Dude, what is this going on? Broadcom really taking down the whole market? Let's see if we can get some more coverage on this. This is just a bit interesting. Okay, while I'm trying to get that, let's listen to JP Morgan. He's live right now, or one of the analysts from JP Morgan. Let's see what they have to say about this market, and then we'll see if we can get some Broadcom news. Are you blushing right now? Yeah, Jessica's, special woman in my life.
Signal. When do you think that hits some kind of critical mass?
Well, when we talk about recessionary signals, the most important thing is don't think about this like the pandemic recession or the great financial crisis. Those were mega recessions. We are sort of slipping slowly into this here. I see the market is up today. I think that is, that's obviously reflecting the fact that we think we're going to get some rate cuts out of this, but that's not going to fix anything. The most important thing that I think the administration needs to realize is if you cut rates here, you're going to cut the interest income of retirees. You're going to tell people there are more rate cuts coming, so why borrow now? Let's wait and see. The whole history of the 21st century is rate cuts don't stimulate growth. They didn't in any way after the great financial crisis. So don't look to the Fed to bail out the economy. It can help the stock market, and that's what we're seeing today.
No, I mean,
it can help.
It can bring rates. It can bring mortgage rates down. It can bring. That's been a headwind.
Housing is 4% of the economy.
Well, it's already. Look at the 10-year yield has gone to 4%.
Yes, but the housing is 4% of the
economy.
economy. Meanwhile, you've got all these people sitting on retirement income. Who are losing money because of lower as the short rates come down, plus all the fear this causes. Why is the Fed cutting rates? Because they think recession. And that adds to the biggest tax that the government levies. The biggest tax the government levies is an uncertainty tax. People don't know tariffs, they don't know immigration, they don't know how to run a business with all this uncertainty, and that is acting as a real lead weight on the economy right now. And honestly, there's no reason why this economy should be grinding to a halt. It shouldn't be. We've got the most energetic, enterprising people in the world. We should be growing steadily at 2%, but I think this uncertainty is really slowing us down.
The uncertainty from
all the changes in policies.
All right, so you're talking trade, you're talking immigration.
Trade, immigration, geopolitics, the dollar. I mean, I know the president and the administration want to change a lot of things, but from a business person's perspective, they need to know who to sell to.
Okay, Jose's coming on in 15 minutes, guys. We'll be on in 15.
They need to know where they can find workers, and this uncertainty. It's people voted, and that's I'm not getting into the politics here, but I am saying that there is a level of uncertainty here which is just causing people to freeze, and that's really what you're seeing. You can see it in the hiring numbers. That's the problem. Businesses aren't laying off thousands and thousands; they're just waiting to see. And the three most deadly words in economics are wait and see. When everybody decides to wait and see, what you see is not good.
But I think you can make an argument though that they got certainty on the tax front. And actually stimulus on that front as far as expensing R&D and equipment.
Yeah.
I think that there's more certainty on the regulatory front and more friendly regulatory policy.
Yeah.
I think that on tariffs, I get the uncertainty. Will they, won't they? Will they stick? Will they be legal? But, what we've heard mostly from companies is that they're figuring out ways to mitigate it, and that they're not actually pausing or changing their strategies or
no. I absolutely, the tax cuts are beneficial for corporations and beneficial for corporate profits. But on tariffs, my view on tariffs. I don't like tariffs, but I do think that making a deal with, we made a deal with Japan this week, or we make another deal with the UK, or suddenly we're going to double the tariffs in India. You've got to end it, because if when you look at the manufacturing numbers, how am I going to locate a plant in the US to compete against a foreign competitor when I don't know that those tariffs won't change next week? And so if you're going to do tariffs, do it through Congress,
Obviously, JP Morgan is bearish, and I don't know. It's a little too doomeristic for me. There's a counter argument to a lot of things that he's saying. It's not like he's saying something that's absurd, but there's also the reality of what's actually happening in corporate earnings that it seems like he's dismissing for a lot of macro stuff, which again, that macro stuff matters if it messes up earnings. And in Q1 and Q2, that didn't happen. In Q3, we'll see. Like, what's a bigger threat to NVIDIA, CPI or Broadcom taking their lunch? I would say it's Broadcom. Right? That's actually a reason to sell NVIDIA, not CPI. And so a lot of the stuff he's talking about is a bit more macro, not as rooted in the reality of some of these companies and their earnings growth. But it seems like that is the kind of crux of the bear case for JP Morgan.
Tariff regime in place that's going to stay for 20 years, then at least the play.
That's generally how it works under the Constitution. Interestingly, you mentioned Congress because there's a headline this morning that Schumer is going to force a vote that would basically try to undo Trump tariffs. We'll see how far they get on that. But I wonder if we do end up with a clash, not just with the courts, but with the Hill.
Well, it's got to be thoughtful. But the most important thing for business is tell me what the rules are. American business is extraordinarily good. They're very adaptive. They're very good at at growing if you tell them what the rules are. So you're right.
I think that they're hearing what the rules are. The rules are you're going to have tariffs. You're going to have 20% tariffs probably.
But there's a difference between 20% and 50%. There's a difference country by country. And also, I mean, remember, I mean, they are a tax on consumers. Now, I'm not saying that we're going to have a recession here. I think we can avoid it. But I do think there's some clarity and certainty around these policies would make it easier for business to grow.
I disagree with that. We have had uncertainty and no clarity around tariffs for the past 10 months, and Q2 was amazing. And the companies that cited tariffs as an issue, honestly, those companies have not been executing that well either. Because the companies that either cited tariffs as like, yeah, it's kind of an issue, or just said, we don't really care about tariffs, they've been doing fine because they've been able to deal with navigating their business without tariffs. So if his biggest issue right now is that we have tariff uncertainty, like that argument is so May 2025. Like we're in September. It's like, I don't know if the tariff certainty is the crux of like how you develop a super big bear case here. Companies have proven they can find a way to execute with the tariffs. Maybe in Q3 that changes, but at least in Q2, that's what we saw. Goldman Sachs says buy the September dip. Goldman Sachs macro trader advises buying September stock dip, predicting the S&P 500 could climb to 6,700 to 6,900 as rate cuts can boost growth. Well, I mean, you got a lot of the analysts that have these close to 7,000 targets on the S&P, and all of them have pretty much advised their clients to buy the September dip. That's not really anything new. We knew going into September that most people say the September dip is one for buying. By the way, BMNR, psychologically, not the prettiest, below 40, 39.82. I think it's not a specific BMNR thing. Everything obviously is getting hit right now. By about 5 to 7%. Hood's down 5%, Palantir's down 5%, Nvidia's down 4%. So BMNR is going to fall with everything. AppLovin's down 5%. I mean, AppLovin was at $500 in the pre-market. You know, S&P is down 0.5%, 645. So everything's going to get hit if that's happening. What's green? Google, Opendoor, Grab, and Broadcom. Those are your green names for today. And Reddit. Everything else is starting to get or feel a lot more of this pain. For those asking why is all of this happening in terms of this downside today, honestly, there's not an answer. I guess the one argument I can explain is the jobs data not being good. But ironically, the jobs data increases the likelihood for a rate cut, which is why we were pumping for the first 30 minutes. So maybe the market woke up and said, actually, no, jobs data is bearish and bad news is bad news, but I can't cite any other fundamental reason. Nothing Trump said, nothing geopolitical outside of that jobs data. Or it just being Friday in September and, you know, we wanted to escape this week unhinged, and unfortunately, it's hard to escape this week in Friday in particular without dealing with some pain. BMNR back above 40, so 39.80 to 40.09. Where is Enphase? That one is green on the day, 3.4%. Enphase has kind of been stuck between 35 and 40 for the past couple of weeks. But Enphase holding a little bit of its green as well. Where's fear and greed? Let's see. Fear and greed. Wow, neutral. We're not even at greed. Dude, look, I mean, this is, you guys saw me do it today with buying 25 shares of Hood. I think this is a month where for those that are not selling your equities for the next 10 years, these are the months that you should be excited about. Just, I know it's super cliche to say this, but like, we haven't had a really good dip since April. Literally, we have not had a dip since April. We thought August would be that dip. You had August 1st, which wasn't even really a dip, down about 1.62%, and then we just went straight up. This is the first time you're seeing any pain. And the S&P 500 is basically at all-time highs. We're not still in the sort of like massive dip category on some individual stocks, maybe. But I think this is a month to accumulate assets unless anything has fundamentally changed in the overall narrative of the market. And, you know, we'll see how bad the labor market turns out over the next couple months. But I don't think anything has changed to such a degree where you get the hell out of this market and you sell. Maybe you don't have to go balls to the wall and start buying like crazy, but are you really selling a lot of these names because of some of this? I don't think so. I don't think so. Stuart said he bought some BMNR. Ciro said he bought some BMNR. It is said 10 bear. That is also true. That's why September is getting hit, or that's why September could be getting hit. Oracle is up a little bit. Micron's also green a little bit. You got some of these. Here's the other weird thing. Like if this was a full-on sell-off, you would not have an Oracle or a Micron going green. It's a very kind of selective sell-off. That was like Oracle's up 2%. I don't know. This feels like a buy the dip, bro. This does not feel like a run for the hills here. Snapchat still green. Silver and gold still green as well. Lyft is up. Lyft was up 5%. Now it's up 1%. Uber is down 1.5. And BM&R back above 40, 40.25. Right here. So we played a couple clips with Trump meeting with all these tech CEOs. There was one clip that I didn't play. This was with Tim Cook. We played the Meta one. We played the Sergey Brin. I'll play the Tim Cook one, but I mean, you had a lot of these tech CEOs basically. Oh, here, hold on. Let's listen to Sam Altman first. I actually didn't see this one. So this is the Sam Altman one, and then we'll see Tim Cook. This is from yesterday's AI dinner that they had at the White House.
Of a very new industry at a very young age. You're a young guy. Do you want to tell us about what you're doing? You told.
By the way, Zucks is sitting right across from him. Zucks stole 20 of his best researchers over the past 3 months. So like the level of narratives and dynamics at this table cannot be understated. It's kind of crazy to see it happening, but kind of wild to see all of them together.
Many things before that are absolutely unbelievable. So what are you doing?
First of all, to echo the comments of Tim and others, thank you so much for getting us all together. And thank you for being such a pro-business, pro-innovation president. It's a very refreshing change. We're very excited to see what you're doing to make all of our companies and our entire country so successful. The investment that's happening here, the ability to get the power in the industry back in the United States, I think this will set us up for a long period of great success leading the world. And I don't think that would be happening now without your leadership. We're very grateful to be able to build our company here, to build data centers here, to build the entire AI industry and lead the world in the United States. Echoing many other people's comments, I think this will transform the world in a profound way. And I think it really will be to the United States' advantage to be able to lead the world this way. The event that the First Lady hosted today about education was really wonderful. And watching what AI is doing even today for education and so many other industries is really great. So thank you so much for enabling this. We will invest a ton in the United States, and we will do our best to make sure that.
Hey, that was Sam Altman. This was Tim Cook.
Job with Apple, little company called Apple.
Thank you, Mr. President.
Very, very few people have been able to do what you've done. Congratulations. Please.
Thank you, sir. That means a lot to me. I want to thank you for including me this evening. It's incredible to be among everyone here, particularly you and the First Lady. I always enjoyed having dinner and interacting. I want to thank you for setting tones such that we could make a major investment in the United States and have some key manufacturing, advanced manufacturing here. I think that says a lot about your focus and your leadership and your focus on innovation. I also want to thank you for helping American companies around the world. This is a very key thing, and I really enjoy working with your administration on those topics as well, because I think they're so important to the country. I want to thank the First Lady for focusing on education.
Okay, so pretty much all the glazing that is necessary from all these people to do what they got to do. Folks, we got the Lulu CEO right on. Let's see what he has to say about this quarter and kind of how he's justifying some of the results that they put up as well.
This year, what happened?
Yeah, obviously, as we've evolved through this year and the tariff rates have been solidified, de minimis through the executive order and executed at the end of August was something that is new and we had not anticipated. We had planned for it in 27 with the great, beautiful bill, but the
Hold on, folks. I got a text from Triple V. We haven't had a text like this in a while. He went shopping. Sorry if the video is lagging a little bit. Is the audio good? Let me know if the audio is good. This is hotel Wi-Fi. If we give the Wi-Fi a second, hopefully it gets better. But yeah, maybe is it still a potato? Am I a potato? Okay, I look fine, but whenever I stream a video, it doesn't look the best. All right, so as long as you guys can hear the audio on the video, hopefully the lag is not too bad. All right, audio is good. Cool. All right, so Triple V, he has purchased 100,000 shares of Hoodie at $98.10. 100,000 shares of NVIDIA at $164.64. And 100,000 shares of BMNR at $40.40. Okay, so let's do the math on that. How much did this guy? 100,000 times 98.1 plus 100,000 times 164.64 plus 100,000 times 40.4. All right, so a nice little $30 million day, 30.314 million for Mr. Triple V. Hopefully he can save a little bit of the market from crashing today. So there you go. BMNR, I think, is new for him. Hood, he's been in for a while. He has like, I think, almost like 4 million shares of Hood. NVIDIA, he's been in for a while. I don't know how many shares he has of NVIDIA, but BMNR, that looks like a new one for him. So there you go. Hood, NVIDIA, BMNR. He is buying the dip. It's nice to be wealthy. One day, folks, all of us, one day. One day. Hopefully we can experience that. Just because the market's probably going to recover, if not in the next month, at least in the next year, 2 years, and all those purchases will be up and money will continue to make more money. So there you go. Hood, NVIDIA, BMNR is what he bought.
Expedition of that earlier resulted in the guidance updates that we provided.
So de minimis obviously was a much bigger deal than you thought and that the street was expecting. Why does it hit you harder than your competitors?
Yeah, with a DC network in Canada, it was a program that we were able to take advantage of. About 2/3 of our online orders were shipped from our Canadian facility. A majority of those orders are under the $800. So we do move from paying no tariff to paying tariff on it. So we are in acting.
All right. So basically the de minimis regulations is what he is complaining about the most. Again, sorry about the video. The Wi-Fi is deciding to be weird. Maybe people are waking up and they're using the internet more at the hotel. But yeah, it looks like that is kind of the main concern from Lulu, which makes sense along with the tariffs. That's not the best for them. Lulu right here continuing to tank. Bitmine again now back below 40. Lulu still 17% down. The Q's 573. Palantir 148. Hoodie 9702. We break that. Boom, 96. There she goes. Officially lower than what I bought it at today. So that one continuing to fall. AppLovin continuing to fall. S&P 644 continuing to fall. Ethereum 4269 continuing to fall. SoFi 25 cents away from 23 continuing to fall. Unfortunately, Webull is being laggy for you guys as well. I want to switch to my hotspot, but I don't know if my hotspot's going to be that much better. I don't know if my hotspot's going to be that much better. Yeah, I'm sorry about that, guys. At least the audio doesn't seem to be as laggy, but the video is. But if you're looking at the video, it's just red across the board. Even Bitcoin, dude. Bitcoin was at 113 in the morning. Now it's at 110. Now it's at 110. All right, this is some pain. This is some pain. I really can't attribute it to anything other than Friday, September algos. If there's a fundamental reason, it has to be the jobs report. I don't think it's Broadcom, especially because Broadcom now is also falling. It's not like Broadcom's up 50%. Broadcom's still up 9% compared to 15% in the morning, but it looks like it's the jobs data. That might be creating some pain. How much am I down? Okay, so I was down 40. Now 81. Didn't I guess 81 before I opened it up? It's literally at 81 right now. So from 40 to 81. Ugly day. Ugly, ugly Friday. Let's try to get some clarity on what the heck is going on. Jose, good morning.
What was going on, man? Sorry for the lighting on my end. I am freaking didn't plan for this, but what's going on, man?
Is it just me or is he lagging too?
Am I lagging? How about if I turn off my what if I turn off
your camera?
this? Yeah.
Yeah. That's
much
perfect.
better.
That's good. Much better. Dude, thank you for coming on, man. I know you're on vacation and living it up with the family, so I appreciate you taking the time. But dude, okay, put in the chat if we're good, guys.
Yeah,
If it's
testing,
me-
testing, 1, 2.
Am I still good? Yeah, I'm good now as well. Okay, cool. Jose, put your video on. I think maybe it was me. It wasn't you. So you can put your video on.
It might be me. So, left.
Yeah, turn it
right,
off, bro.
left.
Yeah.
Yeah.
Yeah, that's better. Okay, cool. So I appreciate you coming on, man. So Broadcom introduces this $10 billion chip thing with OpenAI. NVIDIA and the entire data center plays are falling down. I mean, I guess some clarity on what you think is going on with Broadcom. Is this an existential threat for NVIDIA?
Yeah, I mean, first, Broadcom had a great earnings, right? They just a quick highlight for those that might be wondering. I mean, first thing is the CEO did mention that he's going to stay there till at least 2030. So it does kind of give a little bit of clarity that they're going to continue to have a strong leadership for at least the next 5 years. The other thing is, like you mentioned, $10 billion with reportedly OpenAI. Is this a major threat to NVIDIA? Am I breaking or am I good? Just before I keep going. All right. Yeah. So, I mean, I think this week has become the week of worries for NVIDIA. I mean, Google, we heard earlier this week that Google is going to be releasing its TPUs to maybe the external market. We heard that Amazon is actually doing really well with some of their Trainium chips, which is kind of their own AI chip. And now we heard that Broadcom is seeing about $10 billion in the market with this new customer. I don't think at the moment yet we're still in this market that's evolving, right? And we continue to investigate all these threats. NVIDIA still is the dominant player here. We continue to see massive wins. But as an investor, if you are worried about NVIDIA, you have to keep a closer eye on how is the market adopting, right? What is changing? I think right now for NVIDIA shareholders, it's more just investigate still. But this is the bearish thesis that we've heard for a long time. As long as NVIDIA continues to innovate, it's not like this threat is new. Competition is very, very strong in this market. As long as, one, the market continues to innovate, NVIDIA continues to innovate, and the strength of the market continues to grow, we continue to see massive capital expenditure. This is a market that anybody can grow. If I was worried for a semiconductor company right now, I personally would say it's more like who is number 2 or number 3, and is Broadcom going to come and kind of be that number 2 or number 3 player for a lot of these companies. So I think right now it's maybe don't stare at the first player, stare at who's number 2 and number 3. But Broadcom definitely had some strength here with their earnings.
So I just want to confirm this $10 billion in custom ASICs, that could have been money that went to NVIDIA, right?
Yes. So that right off the bat, yes, that's money that could have gone to NVIDIA. But just like any other market, right, you need to find a lot of players to play, right? You never have one dependency on one player unless that one player is able to innovate at levels that you need to do it with that one player. So if NVIDIA wants to get that money back, NVIDIA has talked about it in the past. They're like, ASIC market is real. The thing we have is we out invest them. We do everything, right? We do this whole market. So if we can prove that our TCO is better, sure, they might start off with an ASIC project, but after a year or 2, they're going to come back to us. So Jensen sees this threat. He feels confident, but Hock Tan, I forget his name, the CEO of Broadcom, is equally as aggressive, in my opinion. I think both of them are 2 dogs in the semiconductor market that are trying to get as much market and are extremely confident in what they do.
Okay, Jose, this will probably be a stupid question for me, but are ASICs a replacement for GPUs? Like, why is AMD going with these ASICs over more Blackwell chips?
So it's ASICs are good when a workload that you do is done a lot of times. So let's say a GPU is a car that can take you to different stores, whatever store you want to go to. It's a car that can take you anywhere. It's a robo-taxi. It's a FSD that can take you anywhere. A ASIC is a car that can only take you to one store. Now, if you only ever go to that one store, it's probably cheaper to buy that one car that only goes to that one place. You don't need the ability to be able to go all around the world. The upside is you can't kind of turn things around. You can't say go to a new store because it's only good for that one thing. The bright side with it is it's a little bit cheaper. So if OpenAI has some workloads that they only are thinking of doing only over and over again, it makes perfect sense for them to go to the ASIC market. The thing that's important to understand with the current AI space is the AI space is continuously evolving. The road that they were taking or the store they were going to a year ago, it's no longer the store that they might go a year from now. Because of the way the workloads change, maybe there's a more optimization route. Something might change that they might say, look, there's no more point for me to go to this store. I need to go to another store. And that other store, the only way you can be certain that you can go to that other store is if you have a GPU, which can have the ability to kind of change around. So now having that programmability comes with a cost, and that's why GPUs tend to be more expensive. So there might be certain workloads. They might say, look, our image generator might not get any better than it is right now. We might not even change the workloads anymore. We're going to keep it at this. For our image generation workload, we're just going to build an ASIC market for it. Now we can kind of focus these GPUs or whatever into the more expensive, the more innovative products that we need to continue to have that programmability. So I think what we're going to see is a lot of companies, there's going to be certain products that they're going to stop developing or they think are great enough that are going to go for ASIC, and it's going to push the GPUs to go into the, because we know there are GPU constraints. So I'm going to offload my expensive GPUs, no longer doing these easy tasks. I'm only going to be using them for the hard task, and I'm going to be using kind of ASIC solutions for the easy task. Hopefully that made some sense. Hopefully it didn't confuse you a little bit more.
No, this
if
is
it did, my bad.
This is a great analogy, but the way you're describing it to me does not seem to pose an existential threat to NVIDIA.
Yeah. I think the only way this threat is real for NVIDIA is if for every single workload, if AI stops innovating. If AI stops innovating, that means we're always going to go to the same store. So if AI stops innovating and you're going to the same store, you're going to move all your workloads to ASIC. The AI market is still, go ahead.
Can NVIDIA also compete in this ASICs market, or is that just not?
Yeah, I mean, at the moment they don't have to, because they do believe the world is ever changing. So for them, it's higher margins. Usually ASICs do come with lower margins as well. So that's the thing. So NVIDIA is like, at the moment, the world is still evolving. It's still innovating. Maybe there might be one workload that might stay the same, but every workload is not going to stay the same. And that's why you need our GPUs. So NVIDIA right now, I think they only focus on this because they want to, and they know that's where the margin strength is. If they need to enter into the ASIC market, there's nothing stopping them. They can say, look, we have all these developers already in this ecosystem. We have all these chips already in this ecosystem. You can pay us a licensing fee. Our margins are going to be a little bit lower, but at least you come with this whole ecosystem that has already been built up. We have 300,000+ million developers in this ecosystem. You don't want to transfer to another ecosystem. All your systems are already running on our GPUs. Why change everything out? So if NVIDIA really sees a threat to this, I think that they can enter this market pretty easily. I think right now they just chosen not to.
Right. Okay, that makes a lot of sense. And I think that's for the average person to understand the difference between ASICs and GPUs. That also explains why OpenAI is going with Broadcom over NVIDIA for this. The data center stocks are down right now.
Mm-hmm.
You think the data center stocks are being interpreted as NVIDIA data centers, and now this whole Broadcom thing means demand is shifting? Or if Broadcom sells $100 trillion of ASICs, VST, VRT, all those data centers are still going to be highly relevant for their use cases as well.
Yeah, so the great thing about this is no matter who wins, NVIDIA or AMD, every other player in the market is going to win. So they're still going to need the power. Broadcom doesn't provide the power. They're still going to need the HBM or memory. So your Microns and SK Hynix will still be providing either to OpenAI, to Broadcom, or to NVIDIA, whoever it being. So the overall ecosystem is still going to be fine. The AI demand still hasn't shifted. I think here the real threat should be more on the AI chip layer. So it's like, who's going to win here? AMD, Broadcom, Marvell, NVIDIA. Which ones of these players? I think those are the only four that I can think of that are really in this top level space. I think it should be more on those four, but anybody below that level of the supply chain, so like the HBM, the TSMs, the equipment, all that is still really, really good because it's the market is still going to be spending billions on chips.
Right, and the energy needed to actually power those chips in the first place.
Exactly.
All right, Jose, last question for you again, guys. Jose on YouTube, I'm putting his link in the chat and his Twitter, also his newsletter. If you are not subscribed, please make sure to subscribe, especially if you want to keep updated with all the semiconductor chip news. What about NVIDIA? Why do you think NVIDIA is down 7%? Or not NVIDIA, AMD. Why are they down 7% based on this Broadcom news?
I think, like I mentioned, I think if I was a investor at first, I would obviously go shoot for, I would go hunting for the number one player, which is NVIDIA. But to go to the number one player, first, you truly need to be number two. And who are the two companies that are really battling for number two right now? AMD and Broadcom. So if there's going to be any market share disruption between the two right now, it's going to be in this level, in the number two space. AMD has a new product coming out, the MI400. Does kind of, and one of the things that were AMD, excuse me, one thing that AMD investors were excited about is when Sam Altman actually showed up to their AI event talking about the MI400. So I think now questions are happening. Wait, is OpenAI, while it has infinite money glitch where it can keep racing, it truly doesn't have infinite money. We know it's still going to give a lot of money to NVIDIA. But now this $10 billion was to that $10 billion that was going to go to AMD. $10 billion for AMD is a big deal. So I think the market is worried that is AMD going to start losing out a lot of these customers as Broadcom becomes a stronger player and work with a lot of these companies in the AI labs. So I think that's the fear here for AMD right now.
Got it. Makes sense. Thank you, Jose. We really appreciate you taking the time. I know you're on vacation, and we will talk to you next week. Thank you, man.
No problem. Appreciate it. And hopefully, like I said, hopefully my analogy with the chorus made sense to the people on the chat. If not, maybe next time I'll try a different analogy until I get it right.
No, it made a lot of there's custom workloads, and then there's general purpose. NVIDIA obviously has a massive market for general purpose. OpenAI probably needs something more custom, and so it makes sense that they're going to Broadcom as well.
Yeah. And like they only might need custom for one certain type of project that they have. For every other project that they're working in, anything futurely innovative, they're still going to need general purpose.
Right. Right. All right. Jose's YouTube in the chat. Thank you, Jose. Enjoy the vacation. We'll talk to you next week.
Peace.
All right. Bye-bye. All right, so we got some more clarity on what the heck is going on. Basically, Jose said it's not some existential threat for NVIDIA. However, it seems more bullish Broadcom and like NVIDIA, not bearish or bullish NVIDIA, but just like whatever. It's really good for Broadcom. It's not really bad or really good for NVIDIA. But regardless, that Broadcom now below 9% of the day, that along with the jobs report, along with potentially Friday algos, is why we're seeing, I don't know for sure, some of this pain. MicroStrategy almost below 320. Hoodie getting wrecked below 96. Oh my. S&P almost down 1%. Meta's now red. GE Verinova's down 5. Palantir 148. The Q's 571. We were not able to escape this first week of September. At least not yet. We still have a couple hours. We'll see if we bottom out anytime here. But we were not able yet to escape the first week of September. NVIDIA 163. Really? That's at 4 trillion. Wow, NVIDIA 3.99 trillion. 164.40. I think 164.47 gets you to 4 trillion. So it's right back above 4 trillion, but it was just below 4 trillion at 164.07. Goodness, it's going to be fighting for that $4 trillion market cap today. What do I mean when I say algos? I mean the market makers and broader market participants like a Citadel, Jane Street, etc., that control a lot of the confines of what happens in the market. So again, when you sell a call, buy a call, you're usually buying or selling from a market maker. They get a lot of data on what's happening in the market. They try to use that data to their advantage. They make pennies on every single trade. They do like literally billions of trades a day. That's how they make their revenues. And so when I mean algos, I mean, we've seen this time and time again, especially over the past couple of months, where everything dumps all at once. And then at one moment in the day, everything forms the bottom and then everything goes up all at once. It's quite comical. It's like you expect us to believe at 9:45, everything goes down 2%. And then by 9:53, everything at the exact same time. Like, it's pretty remarkable that like the most important companies in the world at the exact moment of the day all make an intraday low and then start to go up. I mean, like, that's algos, right? And those algos then influence human behavior, coming in on either buying the dip or selling. But yeah, that's what I mean when I say algos. And, you know, algos are not a horrible thing in the market. It's just a function of the market that everyone has to be aware of. And as of now, I don't think we've seen an algorithmic intraday bottom, because you think we get a low and then we make a newer low, like on hoodie. So far, 95.66 was the low at 11.05, which is right now. It's about to be 11.06. So now we're up from 95.66. Do we get back below 95.66? We got to see. And maybe if that is the intraday low, that'll resonate with some of the other companies, but they're all kind of moving in lockstep with each other. NVIDIA trying to get back up to 165. So it hit 164.07, kind of at 11.05, at 11.04. Again, if 11.05, 11.04 is Eastern time is the intraday low, then we'll see in the next 20 minutes. Definitely in the next couple hours, but that could be more rooted in algos. Jobs report already came out. It wasn't good. But technically that is good for the labor market. But maybe the broader market does not care about the jobs report. So we got to see. But again, I think, it's just like no one can be surprised. We knew September heading into this, we were going to see some of this, and we got a taste of it on Monday. Then it went away for 4 days. Now it's back on Friday. I mean, kind of the nature of how September is playing out so far. I continue to believe it's a buy the dip. The question is just, will the macro hold up in order to allow this dip to persist? Let's get a little bit of coverage on Tesla as well. Again, sorry for the video, guys. You should be able to see the audio or hear the audio. I think after this, I might just switch to my hotspot. I don't know if it's going to be that much better, but maybe that couldn't fix it.
Tesla's biggest asset, arguably Tesla's biggest asset, which is Elon Musk. But I wonder if they should be spending time as well as incentivizing Musk to stay on succession plans. Doesn't it raise that question too?
I mean, it's a good point, and not in the boardroom. So, but I think keeping the innovation engine going is certainly, maybe that's step one, and this allows them to create, and we'll see more, around that to come. But certainly, there's no way to look at this and say, hey, this is a negative. It's certainly a positive for shareholders, for Elon, and probably for all of us if they're able to achieve autonomy at scale.
All right, we're going to try switching to the hotspot. So give it a minute. It's going to be a black screen for a minute. Do not leave. If you leave, I will find you. But we are going to switch. Let's see what happens. Maybe this works. All right, here we go. Black screen. Yes, yeah. Are we back? Are we good? Are we decent? I think. Okay, so let's see now. Let's see with the video. If the video's still laggy, then it made no difference. Let's see. Dude, 100 of you guys left. I just said to not leave. What is going on? Let's see. Let's see the video.
We haven't really mentioned a lot of the geopolitical risk. Today, the president posted about India and Russia falling into the hands of the darkest China influences.
Video's good, baby. Video's good. There we go. Not too bad. Not too bad. Okay, so I want to play this then. Now that the video is working. Apparently, if I'm not wrong, yeah, we had this guy. We had Lutnick on today. Let's see what he said, because I didn't watch this yet, and then we'll keep going from there.
Differently. They're calling this a combination of investments, loans, and loan guarantees. They're characterizing it as a way to back up Japanese firms' U.S. projects. Where's the funding come from? And in terms of the leeway that the president has.
Dude, if my Wi-Fi getting fixed was the bottom, if the market can recover now, let's see. Where's Hood? Where is Hood? We're almost at 97 on Hood. We're at 95.60. Let's see. Maybe that's what gets us above.
In determining where those investments go.
So the president has complete discretion on where these investments go. The Japanese, it's classic. They are going to meet capital calls in America. They are going to give America money when we ask for it to build the projects. How do they plan to fund it? You know, that's their business, of course. That's up to them on how they plan to get the $550 billion. But what we will see is just the president says, look, I want to build, as an example, the Alaska pipeline. I am going to finally utilize all those assets that we have in Alaska. We're going to build a giant Alaska pipeline, make capital calls to the Japanese. We build that. I mean, think of the employment. You look at next year's employment, it is going to explode. All these factories we're building, all the plants that are coming into America. You know, you look at the unemployment rate numbers today, wait till a year from today. Wow, it will be amazing numbers.
Well, let's talk about that. We do have a jobs report that's coming out in, just over 30 minutes time. 8:30, we're going to get the jobs report. There have been some questions about some weakness kind of popping up in the labor market at this point. What do you see?
Well, the fact is the Donald Trump economy is just beginning, right? I mean, he's convinced all these companies to come in using his tariff policy to just come on in and build here. Way over $10 trillion of investment. So look a year from today, the end of this year starting, and look a year from today, you're going to see employment numbers that you never imagined, because it's what it's going to do is it's going to take the 6.9 million Americans who are capable of working, who are sitting on the sidelines now because they just haven't had the jobs they were looking for. They're all going to come into the workplace because we're going to train them. These are tech jobs. These are building these factories and operating these factories. These are great technician jobs.
Okay, well, those jobs are not showing up yet, unfortunately. So until we see those in the numbers, the market's just not going to care. Again, Lutnick's trying to paint a story about the future job growth. That job growth so far is not there. By the way, folks, we got some breaking news. Friend of the channel, Mr. Chris Patel, has just officially transferred 7 figures to Robinhood. Ladies and gentlemen, we got him. We got him. So he got a 2% bonus, if I'm not wrong, for doing that, which is not too bad. If he transferred $1 million, he got 20,000. So there you go. Chris Patel is officially on Hoodie. If the dip gets dippier, then I imagine Chris will probably buy some Hood stock, because I don't think he fully owns it yet. But there you go. We got Chris on Hoodie. By the way, the third gold month drop was 2% on crypto. So they are giving a lot of money away to people that come to the platform, and that's how they're continuing to acquire their assets. Okay, so Lutnick was not saying anything too crazy on the jobs data. Let's get some more coverage on what's going on with Tesla. This is Robin, who's one of the Tesla chairs, also the name of one of the most gorgeous women on How I Met Your Mother. But here's what she has to say about why Tesla initiated this official proxy for investors today.
In Musk's XAI.
There were a number of proposals on this topic, shareholder proposals on this topic. We are putting it on the ballot, as we would do for any proposals that come in from shareholders that meet the criteria in order to be eligible to be put on the ballot. And so we are letting shareholders vote on whether or not we should invest in XAI. And then the company will and the board will take that into account in our deliberations, whether it's positive or a negative vote on that proposal.
Have you been thinking though about investing in XAI, and is this something that you really wanted to go to the shareholders to get their permission effectively to do first, given invariably the conflict that could be claimed?
Obviously, it's a related party, and we take our responsibilities very, very seriously on the related party front. We have a very robust process of transactions that happen between related parties. Obviously, if there was ever an investment contemplated in a related party, we would at the board level take our related party policy into account. This is a shareholder proposal, and we will let shareholders voice their position on whether or not we should take an interest or invest in XAI.
We're going to have a lot more of that interview in the 8 o'clock hour as well. We get into a whole number of other questions. And as we mentioned earlier, this deal could be worth $1 trillion for Elon Musk if he reaches what are some consider wild goals. It's a pay-for-performance deal where he...
Again, we covered some of that pay-for-performance earlier in the show. I mean, I think the deal makes a lot of sense. But that's the Tesla chair, who does get a lot of shit from shareholders because she has been selling a decent amount of stock over the past couple of years, basically saying, hey, this is the friendliest way that we can engage with our shareholders to get them compensated the way that Elon deserves to be compensated, which is based on performance. Tesla right here, 2.66%. Let's see, folks. Maybe 1105 was the intraday bottom. Hood was at 95.66 at that moment. Palantir, 1105, 148.07. Palantir now almost back to 150. NVIDIA, 164.07 at 1105. Broadcom 331 at 1105. Oracle 226 at, guess what, 1105. Let's see. I mean, we probably need another 20-30 minutes to say that's a legit end of the pain for today. Even if we don't go up a lot, maybe we don't go down worse than that. But it seems like a lot of these names ended up potentially bottoming at those levels for the day. Lulu's still falling, unfortunately. Lulu, even at 1105, it was at 167. Now it's at 168.75. It's still down a lot on the day, but it was down worse. Even Bitmine at 1105, it was at 39.71. It's at 40.40 now. Maybe we are seeing some of that bottom. Dude, my phone hotspot is better than the hotel Wi-Fi. I should have been on the phone hotspot the entire freaking time. I think a lot of people just woke up and they started using the internet or something. And maybe that's what happened. But was anyone in Lulu? This one just got absolutely demolished. I mean, obviously it was not pretty to see how this one played out. I know a lot of people thought this was like a bit of a short-term trade. Let's go now that we can actually hear from the CEO because the internet's better. Let's listen to him again and kind of see him explain some more of this pain.
Are you doing things differently, or is that uncertainty manifesting in some way?
We're definitely moving forward with what we know today as being certain. And I think if there is opportunity to have those reduced, then some of our actions we may not need to take that we're planning, but because we're not fully and we're taking time to plan into it, we have a great balance sheet, cash position, best-in-class margin structure within the industry. So we're going to make sure to make the right decisions to protect the brand and the momentum.
Okay, but this is not just a tariff story. Clearly, what's weighing on the stock and what's weighing on your performance, the growth has come to a halt in the key market of North America. What's going on?
Yeah, as we shared, our international growth momentum continues, and we're not happy with our performance, particularly in the U.S. And when we look at that, it's really rooted in product, in particular in our lounge and social categories linked to some of our successful core franchises that we need to update and bring newness into to delight our guest. And we've not done that. over the last
You just had the
period of time.
wrong assortment, wrong color, wrong style. What was it?
The newness, the guest has responded incredibly well to. What I would say is we haven't brought enough within those categories to engage the guest to have her and him, spend. Our new guest in the U.S. is positive. Our guest spend with our low to mid value guests, so those that are younger with the brand, is up year over year. Our high value guests are over indexing on our new styles, so they're engaged. Their retention is up year over year. It's frequency linked to spend on the core franchises that they have, and they're waiting and reacting to new. And what we need to do is bring, through innovation, more newness to that guest in particular. And I would say our mix right now doesn't represent what the guest is reacting to. And that's the work the team has been in and will continue to improve 26 and through the year.
I wonder.
Yeah, I think you can boil down to everything. I think you can boil down everything he's saying down to we are not resonating with the consumer in a way that we should be. Maybe it's because they don't have innovative marketing like Sydney Sweeney. Maybe because the clothes aren't that stylish. Maybe because their social media campaigns aren't getting people to realize that their clothes deserve the multiple that they, that you would be paying for them. But I don't think it's about tariffs or the de minimis news. I mean, that stuff matters. It seems more so like he is saying the brand is not as relevant. And as a result, that's why Lulu is taking a hit. By the way, we got some news on Google. Alphabet's Google set to be hit with EU antitrust fine over ad tech on Friday. It looks like the sources from Bloomberg are saying 3 billion euros. 3 billion euros on Google is the fine. Yep, there it is. 3 billion on 3 billion. The EU is fining Google almost 3 billion, and they have 60 days to explain how they will remedy their ad tech dominance. 3 billion at the end of the day is a parking ticket for Google. It's probably one of the better scenarios for how this would end up playing out. And as you can see, Google stock not flinching on this because that's way better than Chrome being broken up. Dude, this week was so crazy. Like, we forgot that Google literally 2 days ago got the biggest overhang on the stock taken away. And then they have this Apple partnership with Gemini for Siri. I mean, in the midst of some of the crappiness of this week, incredible momentum for Google, for Apple. And that's really, I mean, without Google and Apple having the week they had, S&P probably is at 630. But Google and Apple, respectively, each going up about 5 to 7%. Google, I think, a little bit more than that, almost 11%. I mean, you could definitely say that has saved the S&P for this week, especially given NVIDIA is down as much as it's down on the day. By the way, I think it's Dylan's birthday, so shout out to Dylan in the chat. I believe he said right here it is his birthday. It's also his day off from work. I love it. So Dylan, thank you for spending the day off. Yeah, thank you for taking the day off on my work on my B-day. Well worth taking a day off. Thanks for staying live for so long. Dylan, thank you for being here. And happy birthday to you. Appreciate you being part of the show every day. Guys, I hate taking off from the show, but yesterday was just impossible to do it. And I think next time I will make a YouTube community post if I take a day off, because I thought I said it on the stream the day before, but there's a lot of people that probably just didn't hear that part. So next time I will make a community post. But I saw you guys all went to Neil and you started calling him the white Amit. And he just had all these people in his chat calling him the way. It was hilarious. So shout out to Neil, Couch Investor. He did a great job yesterday as well, covering the markets. But happy birthday, Dylan. Thank you for being here, man. Thank you for staying with us on your day off from work. And thank you for being part of the channel. Robinhood right here, 97.80, Palantir 149.30, Hoodie 165. So far, looks like 11.05 was that intraday low. We will see. And then you got Tesla right there at 347, 347.60. Thought you died, Amit. No, I did not die. But I woke up to all these messages of just like, where are you? And it's like, look, I deeply appreciate when, because anyone likes to feel appreciated when, like people care about what's going on. But it's also like, I don't want to annoy people. Like, I want people to like not be wondering and all this stuff. So as much as I appreciate the message, I also want people to be informed and just know, like, if I can't make it that day, so that, there's people are not upset about it. So I think next time I'll just do a community post and Because yesterday, okay, so now maybe now we transition this into Aipcon. Maybe we talk about Aipcon. My cousin actually lives in the area I'm at right now, so I'm gonna get brunch with her. She's from India, and I haven't been able to see her for about 7-8 months. So I'll be leaving in a bit to get some brunch with her. But yeah, the reason I couldn't do the market open yesterday is because I had to get ready for Aipcon. Aipcon was pretty wild. And one of the reasons it was wild, obviously, is because you guys saw we had the man join the stream. We had the man join the stream, Dr. Alex Karp. This was a pretty wild situation. One of the people that works with Karp took like literally, and I'm not even joking, 1,000 pictures. This is my camera roll. Just so many pictures of the moment. So I posted 2 of them, but I've got a lot of them. And I'm very, very, very grateful that they took all these pictures. It was just wild seeing all of this documented. But the backstory on this was Sasha, who's the head of corporate development. Me and her have worked together for the past, I think, 4 Aipcons to like make Aipcon exciting. And, you know, as Palantir has a massive retail audience, people watch the live stream. Every time we try to collaborate and think like, how can Aipcon be something that's innovative and exciting? The first Aipcon I did back in June of 2024, that's when Chad was there. We were on the Backstage Pass halftime show. That was like, you know, the first time you had a retail investor there with the employees kind of doing everything together. That format got kind of stale though, because we did it 3 times in a row. And so it was like, you know, both of us were like, what can we do that's different? What can we do that's a little bit more innovative? And then she came up with the idea of like, what if you live stream Aipcon from Aipcon, and during the live stream, you have a forward deployed engineer like Ankit, who is an absolute legend at Palantir. And he was the guy I did the interview with for the AI FDEs that I posted a couple months ago. And you guys can kind of commentate throughout all the presentations. And, you know, maybe we have some people from Palantir step in between the presentations and you talk to them for a couple minutes. And I was like, yeah, I think that's new. That's exciting, a little bit spontaneous. You know, we can see what we can do. So when we were playing this back in August, I was expecting her to be like, yeah, we'll have this person come on, this person come on, you know, people at the company that are high up there, senior executives. But I didn't expect her to say Karp. And so a couple weeks ago, she was like, oh, by the way, I want Karp to come on. And I was like, well, Sasha, I would love for Dr. Alex Karp, the CEO of Palantir, to come on to that. I mean, that would be pretty cool. But I'm not getting my hopes up because I'm like, dude, he's a busy guy. Like at the end of the day, the moments I've been able to have with him, I've cherished, but he's running a $350 billion company. Like the guy is busy. And ironically, at this Aipcon, after the 20-minute session we had, we actually got to talk for another 20 minutes off camera. And it was the most excited I've seen at an Aipcon for a while, I think, because they just put up $1 billion in revenue. And the last Aipcon, remember, the mood was a little bit different. You just had the New York Times article come out a week before that Aipcon. So the entire mood was basically Karp being pissed the hell off that the New York Times was trying to, put out the narrative that Palantir was the most evil company in the world. So the entire vibe of the last Aipcon was just not the most exciting because you had that overhang of that article. But this is the quarter after $1 billion in revenue. So he was excited. He was energetic. He wanted to do the stream. So when Sasha told me that, I was like, okay, but like, is he actually going to do it? And she was like, yeah, we put it on his schedule. He's going to do it. And so the reason I teased it a couple of days ago of like, hey, maybe we'll have a special guest join is because of what Sasha told me, which is that Karp wants to do it. But in the back of my head, I also didn't want to get too excited myself because I'm like, he might end up not doing it. Like, what if he gets a meeting, a business call, he has to talk to some customer? Like anything could happen, right? These are very high level people. They just might not be able to make the time to do something like this. And then we get into the live stream. Karp gives his keynote on stage. He walks out of the keynote. We're like sitting like, I don't know, 20 feet away from where the actual event was happening. He comes outside. He sees our background that we have. We had a little background set up and he was like, I don't like this background. We got to move somewhere else. And so it was so funny. He was like, dude, they're like making donuts right next to us. He's like, we got to get a new background. I was like, okay, let's get a new background. So we walk around for like 5 minutes. That's when the camera was turned off and we try to find a background. And then he was like, let's just do it outside. And I was like, let's just do it outside. Let's do it. And then we go outside and then he hops onto the show. Now, before we went on, I will tell you guys the number one thing that Karp told me as like advice for the interview, if you want to call it that, is red meat. He was like, ask me the shit that people care about. He was like, red meat. He's like, ask me the stuff that people want to know. You know, not like, oh, so your operating margins are like, no, not some analyst who's like, ask me like the shit that everyone in your audience actually cares about. You know, and a lot of that stuff is, hey, the woke right and the woke left hates you. What do you think about that? That's not a question. Mariana from Bank of America, who I got to see at the AIP, she is just so gorgeous, bro. She is absolutely gorgeous. And she's just one of the most loveliest people on the planet. And she's been so right about Palantir. So it was great getting to connect with her. But, you know, she's not going to ask about the woke right and the woke left. But obviously that's something that, you know, has become a hot topic because every YouTuber on the planet apparently wants to say that Palantir is evil, whether they're extreme left or extreme right. So his advice was like, hey, let's talk about the shit that actually matters, that people care about. And I was like, let's do it, bro. Let's do it. Because I don't know what was off limits. He was like, nothing's off limit. Let's just talk about the shit that your audience actually cares about, not anything cookie cutter. And I was like, let's go for it. And it's kind of easy when you get into it because, you know, Karp can start talking and get into his riff. And then there was nothing that was off limits. He just wanted to be raw and authentic. And so we get into it. And I kind of like that the entire vibe of it was like shitty camera, outside, not high production. I mean, it was just the most raw, authentic way, which this entire journey has been raw and authentic in terms of, you know, the retail investing movement. And he just hopped on the stream, and within like seconds, you could tell his energy, his excitement was all about communicating to the audience. He saw all of your comments in the chat. He saw everyone going there, going crazy, screaming out his name. And I think that gave him a lot of energy as well. And the point of what I'm trying to say is he really wanted to do this. This was not something that he was forced to do. It's not something that, like, you know, they put it on his schedule and he's like, all right, I have to go do this stream. Like, he purposely took way more time than we had allocated for. It was supposed to be 5 minutes and ended up being like 25 minutes. And he literally wanted to find an entire new background just to make it a little bit better to do the stream. And so I thought it was really cool. I'll share a couple moments of it from it, but this was one of the moments I thought yesterday that Brett clipped about retail investors in Palantir.
If you want to learn from retail investors at Palantir, which I would say is one of the best group of people you can learn from, you've got to go into your own time, your own space, and validate what people are saying. And then the other thing you really have to do is, being right is an art, it's not a science. So if somebody's telling you Palantir is going to eviscerate your civil liberties, it's a conspiracy, Karp is a conspiracy by the CIA to take away your liberties. Okay, well then you could just prima facie ask, why did they hire the company that they liked the least and transfer billions of revenue to him personally?
Why did they hire? Let me switch over to, sorry, my video has a lot better volume than Brett. Let me switch over to that. Let's play it again from here.
Are real issues and have to be discussed. I would encourage skeptics to just remember, if you want to learn from retail investors at Palantir, which I would say is one of the best group of people you can learn from, you've got to go into your own time, your own space, and validate what people are saying. And then the other thing you really have to do is,
that table took a beating, bro. Like, the amount of times he banged that table, I was like, bro, like, is your hand not hurt by now? He was like, the passion that he had speaking in the stream, it was just awesome for us to see, especially because the bang in the table has become such a meme over the past couple of years as well.
Being right is an art, it's not a science. So if somebody's telling you Palantir is going to eviscerate your civil liberties, it's a conspiracy, Karp is a conspiracy by the CIA to take away your liberties. Okay, well then you could just prima facie ask, why did they hire the company that they liked the least and transfer billions of revenue to him personally?
Why did they hire the company that sued them?
Yeah, well, then we had to sue the DoD. But even like, you know, okay, so there's a magical lottery where I win it. Okay, great. So it's like, well, yeah, I love the idea that I magically win a lottery.
And dude, that wasn't a fake laugh from me. Like that's a hell of a point. Like, when you look at the woke left and the woke right come together with their conspiracy theories, it's like a half black, half Jewish, or not half Jewish, but half black, half white Jewish man who is dyslexic somehow wins the lottery of controlling the world with his evil company. Like, it sounds stupid, bro. It's not real. And so like you know, the reason I started laughing is because, like, when you put it together like that, it's like, oh yeah, that's how the conspiracy plays out. That's the guy that ends up controlling the entire planet who's going to take over the world. Like, it doesn't make sense. And a lot of people, I think, are bored and they want a hot story. And that's how they come to this conclusion.
And then what about the people who like worked at Palantir for like 10 years who are like dedicated their life? Like we're just working magically all the time around the clock with the highest IQ, most difficult people in the world. By the way, who are mostly American. Many of them come from the Midwest, look exactly like our retail investor base. And
I was talking to Cam Hardaway the other day.
Yeah,
And,
exactly. Yeah.
Tall, Christian, 7 kids.
Oh, well, no, I mean the whole, so you have the left and the right. It's like Palantir is a Jewish conspiracy led by a motley, like completely, uniquely structured mutt that somehow it's like, yeah, well, how do you explain all honestly, most people at Palantir who've worked at Palantir are white male Christian.
Yeah.
Like, oh yeah, but they're dedicating their life to my conspiracy. The whole thing is, but
yeah, it's like the white male Christians are supposed to hate all the Jewish people from a conspiratorial perspective. So that's why Karp is just like, wait a second, these paradoxes don't make sense. And Cam Hardaway, who doesn't work at Palantir anymore, he's an awesome guy. White, tall, male, Christian, 7 kids, as conservative as they get, like he's not working for Palantir inside of some Jewish conspiracy. So it's just like, it was kind of funny to see him actually, Karp's not going to say this on CNBC. Karp's not going to be on Bloomberg talking the way he's talking right here. I think he was very relaxed. You guys in the chat made him feel very relaxed. And he really wanted to do this, to kind of just address some of the shit that's being said about them. Here was the beginning of the interview where I asked him, what does it feel like over the past couple of years to see the stock do as well as it has and the company to progress as much as it's progressing?
I just all the way up because they knew so much about software. They were crying when the S&P happened. They're afraid that I'm sending Letinol-laced drones, which obviously was a joke. But, apparently they didn't understand the joke. Some people on the woke right and left don't get the joke.
How does it feel? The stock was $6. Obviously, things have changed. Retail believed. Institutions did it. Now institutions are like, well, I guess you got to. I mean, how does it feel?
Institutions are like, oh, yeah, valuation's so high. I'm like, well, when did you invest? Yeah, but no, it feels great. But honestly, look, our business was built and is built to provide an unfair advantage to people that are fighting on the front line for things like truth, rule of law, meritocracy. But the small individual person that risked their own assets and didn't have a lot, it always reminded me of me. I didn't have a lot. I risked everything to build what I co-built. And everybody was laughing all the way. And it's really important for the progress of humanity, for truth seekers who risk everything they have to win. Now, it doesn't mean you're going to win, but I can sure as fuck tell you it motivated me every day. And like a lot of these things are like, it's like Palantir does not happen automatically. Like if you just, you guys follow our products, but it's like PG, Foundry, Ontology, Apollo, Maven. The building the product, the conceptualization of the product, the getting it to the point where it can be moderately deployed with highly technical, so deltas, moving it to the point where it can be serviced and extended by FDEs and then by the client, and then magically getting paid for it. This is like warlike effort over a long period of time. Not to mention the people that are on the inside creating value are some of the smartest and often most difficult people on the planet, and you've got to get them to actually align. And that, but again, all of that would have been for naught if at the DPO people had not shown up and said, "Fuck the institutional experts. They're not actually even doing the math. They just don't like us because they don't like us. They like us. They hate us so much they will not look at the underlying math or the product." Like, and
why do you think they hated you?
So this, when people say, Karp doesn't care about retail or Karp's just using retail, like guys, I mean, you can believe whatever you want, but like in that moment, and hopefully people can see the energy that he's giving off right here. He really, really appreciated the work that we've all been doing for the past 5 years to analyze this company. And the main reason for that, it almost has nothing to do with the stock. It has to do with his disdain for the analysts not understanding, or I should better say, not trying to understand Palantir. Because it's a difference of, you don't understand it because it's complicated. And then there's a difference between not wanting to understand. And he goes on in the interview to discuss their entire business model steak dinners, etc., is predicated on Palantir's version of building a software company not actually existing. And as a result, he was just so grateful to all of us in the community that said, no, there's something really special here. Now the market has recognized that special value, which is why he's, very excited and happy about how this is all played out. But he's deeply, deeply grateful and humbled by the fact that a lot of people cared when the most important institutional analysts simply didn't care.
Like, why did retail see something special?
Well, I mean, the thing is, at the end of the day, I look and feel like a retail person. I'm like a, dyslexic misfit that, never really was ever going to have a real place in the institutional structure. They were never going to value me. The fact that I had my own ideas, or we had our own ideas that were not 100% derivative from a playbook that existed 100 years ago, that is not working anymore, and that should not work anymore. And like, when you're looking at Palantir and you're like, you got your day job, you're looking at, okay, just a minute, this guy's saying some stuff. I kind of think that's crazy, or I think that's interesting, but I know how people react to me when I do say things that turn out to be true. And I'm going to go put my own efforts behind this person. And by the way, in two ways, really, putting up money and then defending us.
Yeah.
Palantir has been under constant attack since inception. First, it was the Valley saying I was a clown, taking all these talented people and getting them to work on, saving the West. Then it was, the FDE model could never scale until like 5
Well, now
years.
every company seems to have a forward deployed engineer.
Well, there's this Wittgenstein quote that I love. Ein Regel folgen zu glauben ist kein Regel zu folgen, which is to believe you're following a rule is not to follow a rule. It's like, yeah, they all have FDAs. They're just sales.
By the way, market's recovering a little bit. I was down 80,000. Now I'm down 56. I think a lot of you guys are probably recovering as well. Palantir back above 150. Hoodie at 98.50. Maybe 11.05 was a little bit of the bottom for the day.
Which is to believe you're following a rule is not to follow a rule. It's like, yeah, they all have FDAs. They're just salespeople with no ontology. Like, it's crazy that you think this is going to work without orchestrating who does what, without the best people in the world, and without ontology and foundry. And by the way, this is a scale game, not a venture game. So you don't have scale, you don't have ontology, you do not have the internal orchestration, you do not have an understanding of where the high fidelity data sets are, and you have some ridiculous idea of how LLMs are going to work. And you think your job is to just say, hey, we're Palantir because we have some fake FDE that's actually a salesperson that's not an engineer, and there's no echo, there's no delta, there's no ontology, there's no culture. We benefit. This is another reason why retail people have loved us. Palantir internal culture, as you know, is flat, non-hierarchical, and
That's why you're able to recruit guys like him.
Yeah, well, it's not just him on the inside; it's people like you on the outside. Because, what kind of culture would you like to work with? You want some Nimrod who did their MBA at some school telling you how things have to be, or do you want to build your life? But I'll tell you a variable that's also playing a role. If you have orchestration on the inside, which is, by the way, and the other thing is all this is artistic. Our orchestration is artistic. The FDA is artistic. Building ontology is actually a combination of artistry and then code. So it's like both. There's a way in which time is compounding. So you could look at our financials, 94, 93, 68, 48, meaning the relevant financials of our company. And you could say, well, how's that possible? Well, it's because all the values are creating to artistic orchestration on the inside, on the outside, ontology, fidelity, and that actually compounds time.
Yeah.
So it's what's happening is that we're getting 3 years of value in 1 year, and this is going to accelerate. And why does this happen? Because on a normal company, when you have an impulse from the outside, it de facto goes into a time delay machine where it goes through the hierarchy. Palantir, there's no time delay machine. If we're on something, we're on it. Now, this is obviously not a perfect company, and we have parts of our company that are like Europe where they don't embrace these things. But again, there's an acceleration of time, and the orchestration ontology is like calling yourself an FDE is like me calling myself a linebacker.
Let's take one of those open secrets. So one analogy that brought me to Palantir 13 years ago is this, your description of how the analogy of the FDE works a French kitchen. Do you want to tell the open secret?
Yeah. So the way, first of all, the biggest thing about Palantir is the whole structure is built downstream of value creation.
Correct.
Right. So
now this is really important. When he says downstream of value creation, that is not how most companies operate. to create the value and then get paid for the value, and then for the market to recognize the value is worth a multiple, is very unique to Palantir. It's highly differentiated from other software companies. And that's why this cultural part, which retail really tried to understand in 2022, was the difference between why the institutions didn't get it and why retail did understand that there was something much more special here in terms of Palantir's culture.
Like, then we had this thing where PG, you had, NLP technology and a very complicated product, but it still could not do what a client would want in a complicated environment because the technology wasn't there. And the kind of technology is never there. You're always pushing it beyond the front line. And when I was very poor and sitting in France, just largely reading books and learning the fine art of picking up French women, which is an art. I noticed that, the reason the food was so good is the person serving the food was a technical expert, and they were preparing the food till the final mile. And that meant that it was like an ongoing, but it also meant they were seeing what the client wanted and didn't want. And by the way, if the client asked for horseradish on their souffle, they're like, fuck you, I'm not doing that because that's not how it works. But if the client was like, well, I want a derivative of horseradish, and I'm like, okay. So having
AKA Palantir is going to give you the software that Palantir thinks you need versus the software that you think you need. And as a result, there's a real collaboration there versus you asking for something that Palantir could give you, but they know it's not going to actually change your business. I mean, that takes a lot of guts to be like, we know what the right thing is to sell, and we don't even want your money unless you want to do it our way. And obviously, given we've seen the momentum in terms of their growth, doing it their way has worked. And that's why, they've been able to now actually build custom relationships with companies to the point where these companies can't live without Palantir software.
An instrument on the final mile that actually can accurately document what the partner wants, but also can say no to completely ridiculous shit, extends your product, allows you to build what they ought to build, and gets truth into your enterprise. And that compounds all the way through.
And truth and authenticity is rare. I think one of the reasons people resonate with my journey is because you guys didn't make money for 20 years. Now you're profitable. Now the street really cares about you guys because you were so focused on delivering value. Because you knew the money would eventually find the value. I have not really monetized my audience for the past 5 years and never asked for subscriptions or things like that because I know that the attention and providing value day in and day out unconditionally will work out in the long term. Do you think people realize, or at least the market realizes, that Palantir's delivering value, and that's what you get a multiple?
Again, this is why, the market, first of all, they're so misaligned because at the end of the day, you got to remember, you invest in us because you saw something like yourself. They're petrified that something like us could actually be right. So, it's like, of course, they're going to be a huge discount
because it destroys the software industrial complex.
That's of course that's a software
way
version.
to build a business.
Well, it's like, but it's just like in a world where you're right. What is their job? It's like, yeah, what is their job? It's like, so
that's a real point. What is the job of an analyst in a world in which Palantir's business model works? Because their business model is different from every other software company's business model. And so Karp sees this as an existential threat to the analyst, which is why he understands and he's so antagonistic with the analysts because they never believed in Palantir's business model. They never wanted to really study it because it would pose a threat to their livelihood of being an actual software analyst.
And also, they have all these things where they're perfect and we're imperfect. Yeah, but what if we are the way? What matters in the world is disruption. And by the way, where they were right in the past was the value was incremental. So maybe having the right teeth and the right parents and the right school was much more important than being right. But that's no longer the case, which is why, and people are just go mad. Look. Is there any? Sometimes I go on X and I'm like, does anyone talk about anything besides Palantir? Now I love the fans, but on the negative side, it's like, is there any woke person, right or left, that doesn't wake up in the morning saying I hate Palantir? Is there any business where the person's not running around on TV being like, I don't know, whatever they're saying every day?
Why do you think the woke left and right have put you in the Venn diagram of hating Palantir?
Well, now you always have to steel man these things. Part of the leaders of the woke right and left are selling a narrative where Palantir is anti-civil liberties or anti-worker. This is just not true. We are very pro-civil liberties. And if you define civil liberties as we not only help enforce them, but we are the single hardest product in the world to break, which is why we suffered. Without naming names, there are agencies in the world that are not actually pro-civil liberties. Those agencies never bought our product. So as a category, there are exceptions. SIGINT organizations hate Palantir. And if you wanted to do civil liberties violations, anyone technical, and by the way, I encourage anyone I love skeptics. If you're a skeptic of what I'm saying, take 10 minutes, take 15 minutes and look at our architecture and compare it to not to your divine idea of what software would look like if you knew anything about software or to any other software product in the world. And then it's like, it is the hardest product to abuse. It's the hardest product to emulate. Then
again, this is what the software analysts don't want to do. This is what the New York Times doesn't want to do. When you say Palantir is going to violate your civil liberties, okay, take their software, actually like study it, compare it to every other piece of software on the planet. It's really hard to imagine Palantir is over here violating civil liberties, trying to steal all your data when the entire crux of the foundation of the company in 2003 was built in an antithetical way to that entire concept of stealing data and violating civil liberties. In fact, all the other major tech companies, especially the advertising ones, are actually more in line with stealing data. So if the analysts can't understand that, the New York Times can't understand that. That's why I think you get such a passionate Karp, because the only people that actually understand it are retail. And thankfully, the stock has done so well for retail that it's now something where he's like, wow, the entire world was wrong. It was these set of people back in 2022 that were right. Now the market's starting to recognize that we actually are the winners. And that's where you get the energy from Karp in terms of being able to continue getting this momentum into the promised land for Palantir.
The anti-worker thing, yeah. Large language models are excruciatingly valuable when combined with ontology, combined with tribal knowledge, combined with FDEs, who are actually FDEs, when combined with internal and external orchestration and high fidelity data sets. Okay. The LLM industrial complex had to oversell what they're doing because the ELO scores are however you want to do the hill climb.
They had to prove they weren't a commodity when they were.
Yeah, well, or that the hill climbing was actual reality. It's hill climbing. It's not actual enterprise results. And they're developing in a linear way, and there are many options, not one. The non-linear output of LLMs is as a natural resource. So they oversold this, and the way they oversold it was saying your workers are not going to have a job. And then the workers are like, yeah, but screw that. Right. Why am I transferring all my wealth to these unlikable people? So that is like, those two things are real issues and have to be discussed. I would encourage skeptics to just remember, if you want to learn from retail investors at Palantir, which I would say is one of the best group of people you can learn from, you've got to go into your own time, your own space, and validate what people are saying. And then the other thing you really have to do is, being right is an art, it's not a science. So if somebody's telling you Palantir's...
Okay, we heard that part, so I'll just go 2 minutes further and then we'll get to the end of it.
It's the Democratic Party on the side of poor people. You are somebody who can have a huge impact in life. Verify and develop your own opinion. Then when you start to notice somebody who's consistently right, the rebuttal presumption is they're probably right. And that's how you actually win. And by the way, that person may not be likable for you in the beginning, but the person you like may not be on your side. Like, look, is the Democratic Party on the side of poor people for real? I mean, like I'm an unhappy Democrat at core. It's like could we actually help poor people in this country, or could we just say some BS that is never going to help poor people? Like,
and this also shows you, a lot of people reference Karp as a socialist, Democrat, all this stuff. I mean, you can see his anger right here with how the Democratic Party has treated the idea of being the party that's going to help people, right? I mean, you get to the point where Karp's just like, wait a second, the Democrats are just saying they want to help the most marginalized in society, but they're not actually following through with policies. Whereas this whole AI revolution is being led by the Trump administration that's actually trying to follow through on policies. And you can see the divergence in his sort of like new belief in terms of how things are playing out between Democrats and Republicans.
Oh yeah, I'm afraid of poor people, but nothing works. It's all dangerous. Doesn't work. And there's versions of this. I don't know, you have any other questions you want to ask before I keep ramping?
Yeah, I know you got to go, but we really appreciate you taking the time for this. A lot of people have been waiting to just hear from you live, authentic for a long time. I guess, what is the message to everyone who's been following your journey and in the face of the skeptics that they deal with every day understands that Palantir's a special company?
No. Well, first of all, look at our products, look what we're doing, look at the people we've gathered on the inside. Look at people, look at the people who hate on us. By the way, but we do need those skeptics. We need them attacking us. Like every time these people attack me and Palantir, I wake up and think about orchestration.
Yeah.
Like, it's like, and you should too. It's like, one of the lessons for Palantirian supporters is like, we need the skeptics. We need the people who are saying, we're eviscerating civil liberties so that we can expose our ontology and make it better, and our branching and our ACLs, and teach people what this means and how it works. We need these people also so we can teach people what it means to build, that we're not excluding them. We need the people who are saying this is some weird conspiracy at the expense of X, Y, and Z, to expose people to what real thought is. We need to have a discussion about whether the West is superior and how, are really willing to fight for it. We need to have a discussion about, like, what does corporate hierarchy look like? Is it going to be some kind of, is it like, how do we move it to?
These are hard, nuanced discussions.
Hard, nuanced discussions. We need like their CEO saying, I don't know, like every day we're expensive or whatever is being said. It's like, we need them to expose, hey, I'm sorry Chad gets laid and you don't, it's like, I don't know, there's hard truths in the world. Yeah.
Okay, so he's talking about Benioff right there. I didn't bring up Benioff because I didn't want to, literally say the guy's name, but Karp is talking about Benioff, and that's based on the Benioff clip that I showed you guys a couple of hours ago. And Benioff in general has been starting to talk more about Palantir publicly. And basically Karp is like, hey, he said, he was on another interview yesterday, and he was like, he sounds like a guy who's saying, I'm a nice guy, why can't I get laid? Benioff's like, wait a second, our products are good, they're cheaper than Palantir, why aren't people buying it? It's like, because people don't want to buy it. They don't want to sleep with you. And so that analogy itself was hilarious. But the fact that he used Chad's name, he's not talking about our Chad, Palantir Chad that comes on my channel. But he is, he's saying like a Chad, like a metaphor. But then again, it is Chad's name. So it was kind of hilarious to hear that Chad was in the chat as well. And he got a kick out of that. So I thought that moment was also pretty funny.
Chad gets laid and you don't, it's like, I don't know, there's hard truths in the world. Yeah. We're, why they're not nice enough. They're not nice enough. They get all the girls. I don't know. It's like, yeah, they're like, you got to perform. Like, performance matters, and being right matters, and organizing people in a meritocratic, fair way where you have liberty really is decisive. And we need you, Palantir needs you. We need you to defend us. One of the lessons we're going to see in broader society is you can't sit back and not defend yourself. If you're a Palantirian or a Palantirian supporter, you are very likely on the cutting edge of believing in agency, meritocracy, truth, that the small person can win, that the big person who's entitled, it may be wrong, that even though they have all the reputation and everything, they may have to someday go on TV and complain about how you're getting the goods. But we are going to have to defend ourselves, because we will not win by sitting back and just saying, but what we know is obviously true. Yeah, it was never obviously true. Like, how many, like, all these articles about us, just normal, like, people who can't do math, don't understand product. Yeah, we have to defend ourselves. And so, like, this is, and by the way, it's like we're at the infancy of time collapsing. Like, every day is going to be faster. And those days collapse based on internal orchestration, lack of hierarchy, something like an ontology, something like Foundry, and the world's most talented people.
Fannie Mae, 6 months to 6 seconds. I mean, that is real. And no articles seem to cover that.
Well, also 94. I mean, like, this is the thing. I mean, like, I didn't enter this being overly fixated on financial metrics. And interestingly, I think they are downstream of value creation. I deeply believe that. And we've built the company around that. But, like, argue with rule of 94, 93. I think it's 68% in the market that matters the most in the world, America. We have 68% growth in America. And what does growth mean? It's like top line and bottom line. So it's like 94. We have people complain we're too successful in the U.S. government. We are very successful, but it's 40 points below, commercial. They see wide adoption. Then look at the kind of people that are at Palantir, or once at Palantir, and support Palantir, versus the people that weren't at Palantir, couldn't be at Palantir, never want to be at Palantir, never invested, and think we're some kind of conspiracy that is like a negative indicator of society. Just compare. Judge the people by the fruits they bear. Look at the Palantir fruits. Look at what we do. I mean, and then there's a lot of things we can't talk about that we're doing. Look at the imputed goodness we bring to the world. So in any case, I'm very grateful to you guys. And that you're on the front line. I'm very enthusiastic. We are very enthusiastic about Palantir, and hope to talk to you soon.
Thank you for inspiring a generation.
Take care. Bye.
It's pretty dope, man. It's a pretty dope moment. after that, we got to talk for another 20 minutes when the presentation was done. And yeah, dude, he was in a very happy mood. He was very excited. I think the takeaway I got from Aipcon was I talked to a lot of customers. I have some interviews coming out, and it's the real deal, bro. It's the real deal. Like at this point, there's too many use cases to say it's not the real deal. The only concern now is about valuation. So that brings up another argument around, can they grow into it? And I think they will. Obviously, can they grow 40% for the next 10 years? I don't know. But am I hearing the anecdotal use cases from customers that makes me think this product could expand to the entire world? Yes. And also, Ted and Kevin, which I'll post later, they are the head of global commercial at Palantir. They also came on the stream. I actually didn't know they were going to come on the stream. I thought we were going to do like a separate recorded interview with them, but they came on the stream at around 12:30. So I would highly recommend people to watch that. I mean, their ability to explain the sales culture in Palantir and the way that they think about going deep versus wide when it comes to customer count and customer growth, it makes you think they're building the business the right way. And they've always wanted to build the business the right way, which is going deep versus wide, right? Caring about the 50 people that watch your stream versus being upset that 50,000 people are not watching your stream. Because if you want 50,000, you got to care about those 50, which is my story from 4 years ago. And that's exactly what Palantir is doing with their customers. And it's working because they're going faster than every single software company on the planet, especially in the age of AI. So yeah, it was pretty cool, man. It was pretty incredible. For me personally, I don't even really know how to explain it. It still kind of feels surreal. I've talked to Karp enough amount of times where I wasn't like starstruck in the context of like, oh my goodness, Karp is on the stream. Because we have talked 5-6 times before that stream, and in the conversations we've had, it's been very friendly, very normal, very joking. I mean, it's just like, I met him for the first time in April of 2024. And after that, I met him 6 times within the span of less than a year. So this was my 7th time like seeing him and talking to him. So you develop a little bit of a relationship with the guy where it's not like awkward to like interact with them. And I don't think that his stream was awkward. I think it was very natural. He was very relaxed. We were talking like normal. And then after the stream, when we got to talk as well, felt like you were just talking to a regular guy who's super excited to be in this position in his life right now. You seemed relaxed. Yeah, I was kind of relaxed. Like, I think my heart was beating a little bit when this happens at every point in my life when I'm about to do something. Like, my heart beats aggressively for like the first moment of when you get into it. And then once you get into it, it just becomes a game about communication. That's it. And that's kind of one of the things that, I've built my entire life on, which is effective communication. And so once the camera was on and we all 3 were sitting and like the conversation started happening, then it felt like, oh. And part of that is it felt normal because I've listened to every single keynote that Karp has gave for the past 5 years. So some of his people that work in the office of the CEO, which, manage Karp's daily activities and stuff, and they were all watching the interview and all the stuff, they came up after me and their biggest takeaway from the interview was like, dude, he was the most relaxed that he's ever been, like publicly. And they specifically said the moments where you stopped him and you like doubled down on something he was saying was really good, because obviously we've seen Karp ramble, right? He's a thinker and he thinks a lot and he can go into different rants and things like, and I didn't want him to just talk for 20 minutes with no like nuance of the conversation, because if you let him do that, he will do that, right? Because his mind goes in so many different directions. And a lot of the people that work with him know about that. I think it's pretty obvious. So one of the things they said was it was really good at certain moments where you interrupted him, you stopped him, and you actually said, let's go deeper into this. And you got him back on track to like go deeper and speak about a subject. And that to me it was really nice for me to hear that feedback, because I didn't interrupt him to be rude or anything. I interrupted him because I knew that I had to steer this conversation in a way that would be valuable to the audience. And it seems like at least his team thought that's what happened as well. Which is, it was cool because he seemed to enjoy it. He seemed to get excited about it. He saw all the comments in the chat. He knew that everyone was there. So Siege, thank you for the $20 super chat. I don't think he knew that our stream had more people watching than the Palantir stream itself. I think we had like 2,000 people at the time that were watching Palantir. Had like 700-800, but he was very excited to see everybody in the chat and everyone's everyone's comments. Dens, thank you for the 20s on the super chat. You managed to get Dr. Karp banging on the table on your live stream. So proud of you. And thanks for the segment. I didn't know he was going to bang on the live table. I didn't know he was going to bang the table on the live stream as much as he did. But he got excited. He got heated. And he banged the table. And it's so cool, right? Because like the whole banging the table thing, all of us know, for those that are new to Palantir, Karp banged the table in August of 2022 when they reported one of the worst quarters they ever had. Some analyst asked some question about like why you guys aren't growing, and Karp, like, it was like a mean bang on the table. I think he cursed too. I gotta see if I can find the clip. And basically you could tell he was upset because obviously the dude was not able to get his company when it was $7 to produce the results that were necessary. And so now banging the table is not out of frustration, it's out of excitement for the fact that things have changed and his passion has not died down. I mean, you know, the guy is a multi-billionaire. Palantir is a very successful company. He's delivered shareholder returns 10 times over for people that have, even if you got into the story at 30, 40 bucks, you've still done, even if you got the story at 70 bucks, you've done very well. So the motivation for him to keep growing really does not come from anything monetary. It seems to come from the mission of Palantir. And that's not easy for CEOs to be that mission driven. But I think the entire retail community continues to give him that energy and that fire as well. What did your parents say? So, you know, they were happy about it when they saw it. My mom didn't know this was happening. I didn't tell her because I didn't want to tell her because I was like, what if it doesn't happen, right? I don't want to get anyone's hopes up if it didn't happen. But she saw it, and yeah, you know, they were happy. I think my parents have also, to some extent, just realized this is my life, and like these are certain moments in my life. And you know, they've seen me meet Karp and Vlad before, so it's not like the first time I met him. But they were definitely happy that he was on the stream, and they know it's a big moment, but they also know like I'm trying to continue upping the ante in terms of momentum for my personal brand and my career. Like, taking it to a different level. Professionally, I was talking about this the other day. We got a lot of things that we got to happen this year. I have a lot of projects planned for the future of how we can take this even further. But I think for all of us, it was a come together moment for the entire retail community to see that happen. Hopefully one day we'll be able to do a full sit down podcast with Karp. But like, even if that doesn't happen, that stream, those 20 minutes, it was something that all of us have been waiting for so long. And the conversation that Karp had on the stream, in a very similar way, we had that conversation privately. And so it was just cool to see that happen on stream. Like, I remember back in New York, this was at their Grand Prix event, and I was talking to him, and you know, he asked me like, how's retail going? How are they thinking about the momentum, all this stuff? I think the stock was like 80 bucks at the time. And I was like, well, you know, retail's obviously very exciting, but very excited about the story, but they're also like a little worried about the valuation. And, you know, the stocks now at that time was 150 billion. Now it's at 300 billion. And the one thing he told me back then, which is basically what he said on the stream, is like, hey, like, it's going to be a volatile ride up and down. But the one thing to remember is, as much as the institutions don't like us, retail is not selling. Retail has always had the energy and the commitment to hold on to the stock because they see something that the institutions didn't see. And that was back when it was $70. Now, you know, we're at 150. So basically what he said on the live stream today echoed the same exact statements, that why did retail buy in? Why is retail continuing to hold on? Because they believe in the story. They believe in the mission. And so, you know, that conversation I had with him back in December of last year. And so for that conversation, for now, him to address it to everyone and basically say, hey, the reason you guys are winning is because you believed in us before everyone else believed in us. It was really cool for that to happen on the channel in this moment. And, you know, regardless if there's ever some podcast in the future, I think that was a special moment. And yeah, I'm happy that everyone got to witness it as well. Are you guys getting OCD because the bed is not made in the background? I didn't know, dude. When I booked this, I thought there was gonna be one bed. There's two beds. I was like, okay, I don't know why I need two beds, but yeah, we have two beds. He also said Palantir retail is a great group to learn from. They're good investors. Yeah, this is the other thing we talked about. Like when Arnie and I met him, when the stock fell 25% back in May of 2024. Remember the number one thing, for those that were around the channel at the time, the number one thing he told me and Arnie were, regardless of what anyone says, we effing crushed it yesterday. because it was a day after the earnings and the stock was down 25%. So, when he says Palantir Retail is a great group to learn from, his argument is people like Brett and Arnie and Amit and Matt Money and Amir and Crossroads and all these guys that have been analyzing the company for so long, the depth at which they tried to understand this stock and this company, even when it falls 25% after a great earnings in Q1 of 2024, which ironically is when a lot of you guys ended up buying. I've talked to a lot of you guys in Miami. Your first buy was May of 2024 when the stock was at $20 to $25. And, his argument is just retail dived so deep on understanding the story that's why we've been able to have these gains. So I don't know. It was an exciting story, exciting journey. I'm happy that everyone got to commit to it. Everyone got to see it play out. And yeah, it was special, dude. It was, there's not much more else to say other than it was special. It was really, really, really freaking special. And I'm just really grateful that I have all these pictures. Maybe I'll post all these pictures on a Google Drive or something, and people will be able to see it. It's a lot of just very high quality pictures somehow that they were able to take. And just really raw, candid moments. It's something I'm going to look back on 10 years from now and just be like, wow, this was something that happened. And it was very special for everyone in the community. And hopefully Palantir continues to become the company that, we think it can become. So it was dope. Very special. Very awesome. Thank you, everybody, for enjoying it. Thank you, everyone, also for being on the journey for it. There was just so much love from people that actually saw it happen and so much excitement. And I think that raw energy is what has held the community together for the past couple of years. And I think it will continue to hold the community together into the future. We make their narrative of dumb money versus smart money obsolete. Agreed. 100% agreed. And it's just wild for my parents as well to see, because they're like, okay, so he came on your stream. Interesting. They're just like, all right, I guess that's happening now. And I every day I count my blessings, and I don't take for granted that stuff like this is actually happening in life. Chad, Iliano, it wouldn't happen without the community and without a lot of other people embracing this entire movement. And to see this stuff happen in real life is just pretty incredible. So it was awesome stuff, and hopefully everyone got to enjoy as well when Karp was on yesterday. All right, so we're going to end out the stream in a little bit, but Palantir right here starting to recover, 152.14. Hoodie starting to recover as well, 98.65. NVIDIA, almost 167. Tesla's still green. Iren goes green. Micron's green. Oracle's green. Broadcom, 334. That is up 9%. It is almost like that 1105 bottom was the bottom. Bitmine as well trying to get to 41. There's no real analysis on why this is happening today other than that labor market report, which to me feels stupid if the market actually went down because we're going to get more rate cuts. The labor market report would have to be so bad, aka a couple 100,000 jobs that you were losing, for the markets to meaningfully say there will be and the reason I'm saying this is because if there's not an impact on earnings because of the labor market, then it doesn't matter. Now, if there is an inevitable impact on earnings because the labor market is getting so bad, then it does matter. Even if we get 1 billion rate cuts, if the economy sucks and people don't have jobs, the rate cuts don't matter. If the rate cuts are happening at the same time where the labor market is not deteriorating, it's weakening, which gives you the bull case for the rate cuts, but it's not deteriorating, which gives you the bear case for the economy, then that is, dare I say, the zone that Trump wants to be in. He wants to be in a zone where we have a little bit of a weakening market to get the Fed to cut rates, but not so much of a weakening market that Meta can't make the ad revenue numbers that they are projecting because companies are not wanting to advertise, because companies know that people are not willing to buy their products if they advertise because the economy sucks. We are not in that scenario, and I don't think we end up in that scenario towards the end of the year. But it seemed like at 11 o'clock, the market was acting like that scenario would happen, which is why we saw some of those dips, and now we are seeing a bit of recovery. S&P was at 645, S&P 640, 645 now. S&P trying to find its way back up to a 650. What do you think is going to happen at the Hood conference coming up, and what may happen after? So the Hood conference is going to be for active traders. I don't think the Hood conference itself will have a major impact on the stock. I think the conference will be good for the overall company product velocity, unless they announce something surprising that is like this massive game changer in terms of new revenue streams. But I think it's going to be product updates to Legend, which is, as a Hood shareholder, not being that biased, it's not that good of a product. I'm sorry. It's just not. Like, Legend is not that good, and it needs to get a lot better. So they need to introduce a lot of updates to get, like Jason should be trading on Legend, but he's not leaving TOS anytime soon. And so until they get Jason's money to come over because the product needs to be that much better, then it's just not going to be a good product. So I think they're going to introduce updates to that. Banking, I don't think is going to be announced. It was announced at the Gold event. I think that's coming out in October. I don't think they're going to, maybe they reference it during the active traders event, but I don't think they're going to actually do like any like real media around the banking product coming out. But that should be end of September, early October. And then obviously the major catalyst today, we'll see what happens, is S&P inclusion. Maybe that ends up playing out. So my like honest opinion on the event next week, I don't think it moves the stock. I think what moves the stock is bond yields, interest rates, perceptions of the rate cut, labor market. I really don't think the active trader event is going to move the stock. Also because last time they had a major event, the stock was $45. Now it's $100, right? So it's like, I also can't be asking it to move the stock because like the stock's already made a move. It's made a massive move. You just can't get too greedy here. Do I think it deserves to be closer to 120? Yes, but I also can't go, I'm not, the stock's not at $35 and I'm asking for it to get to 120. It's at 98, up from $30 back in January. Up from 29 when it was in April. So I don't think there's going to be a market moving catalyst on this active traders event, but I think it will create enough product velocity to maybe get the market to be excited about their future growth. But then they've got to put up the numbers in Q3, which I think they will do. So to me, this is just going to be a preview going into Q3 to see what ends up happening. Pound right here, 152, AMD 153. That one also recovering. AMD was below 150 today at, you guessed it, 1105. So 1105 seems to be that bottom. Bitmine was at 39.70. Now it's at 40.81. UNH, great day, 315. Salesforce, actually not a bad day. That's up 3%. And then Meta was at 740. Now it's at 752. That is also up about half a percent of the day. Yes, the S&P inclusion is the third Friday of September, but today is the announcement. Guys, I probably won't be able to do the market close, but I will be able to go live for the S&P. So I will be live at likely 5 p.m. Eastern. The announcement's at 5:15. I think just like with security in the airport and baggage and all that stuff and checking in, it's going to be really hard to actually do the market close. But 15 to 20 minutes before the announcement, I should be able to go live, and it'll be like almost 30 minutes before my flight. So it's going to have to be quick. But we should be able to see the announcement. And I'm not betting on Hood getting in, but let's see. Who knows? Maybe it ends up happening. Last time we pumped on the Friday going into the S&P inclusion and nothing happened. I kind of like that we're dumping going into the inclusion announcement. Maybe something does happen, and maybe this reverses. But later throughout the day, we're going to see if that ends up playing out. NVIDIA right here down about 2%. Lulu down 18%. AMD still down 5%. Micron up 3%. Oscar's up 3%, ASML's up 3%, Grab still holding on up almost 2%, and Open Door, I mean, it's become a thing. By the way, I think Citron has tweeted about Open Door today. This might be the biggest reason Open Door is going to go to the moon. Citron didn't say they're short, but they said Open Door is not a good quality company. They said there's no way they can capitalize on AI to scale margins. Housing is low margin, 1% to 2% swing wipes out profits. Capital heavy, billion ties into inventory. Competition, Zillow's already tried and failed this model, and with its cash burn, expect massive dilution soon. They said the business model is not broken. It has never worked. Honestly, I agree with Citron. I mean, everything they're saying right here makes a lot of sense on why I think the fundamental story in Open Door isn't real. However, they're ignoring that there is now a passionate retail army to the tune of this being the third most traded stock every single day in the stock market. That's probably going to diamond hand this thing and not sell. So yeah, I would not short Open Door, but I mean, the idea that this thing can't get to 10, 15 bucks off retail hype, I mean, anything's possible. And the fact that it's already above 6, I mean, like that's testament enough to the fact that retail's not selling. Now, look, management, if they dilute, that would be ugly. If they get a new CEO that's not retail friendly, that would be ugly. And then finally, if they put up Q3 results that are just like not high margin results because like the business model, in my opinion, is not really that strong, then the market might end up saying, wait a second, why the hell are we buying this? So there's a lot of ways this could collapse, but there's also a lot of ways it doesn't need to collapse. And I think getting a new CEO is going to be the first thing to start it off, and that could be the real change. But we got to see. We gotta see. And if you bought it under $1 or $2, I mean, even if it does fall 50% from here, you're still up, right? So you got to ask yourself a question. Do you think the risk reward to the upside, if you bought at $2, is greater than holding it and dealing with a potential downside that could happen from a variety of things happening, as simple as their earnings not being as good, right? That could be one of the reasons the stock tanks. Again, I don't think rate cuts is what helps Opendoor. They sold a lot of homes back in 2021. They couldn't make a profit. So everyone's saying the rate cuts means they have more volume. It's like, okay, but where's their margin? Now, if they introduce something to get some margin, which I think is going to be difficult, but let's say they do, maybe that's your bright side. But they made $21 billion in revenue in 2021. Now they're going to do this year, I think, about $5 billion. That they didn't make a profit, right? So it's not about the number of homes they can sell via rates could go to negative 15. The question is, can they make a profit on those homes? And I don't know if that's that easy to do. But if they figure that out, then that obviously could help Opendoor. Okay, we have some other updates coming out right now. Scott Bessent just put out a piece on the Wall Street Journal, an entire op-ed, and the op-ed is an opinion piece around the Fed. Bessent said, the Fed must scale back their economic distortions, restore confidence to American people, and undergo a nonpartisan review. So you got Scotty B that's putting out some arguments right here on why the Fed needs to fundamentally change. Okay, we'll see if that actually results in anything meaningful from Scotty B. But there you go. So that's one thing that's coming out right here. And then we have some Trump updates. Let me pull this up. I don't think he tweeted. He did say yesterday he's planning really heavy tariffs on companies that don't produce their chips in the United States. Again, NVIDIA, AMD, they're going to be exempt from that based on the partnerships they have with the U.S. government. But he did tweet out yesterday that he is getting ready for very strong tariffs if you don't make your chips in the United States. Trump is reportedly considering blocking U.S. tech companies from outsourcing jobs to India. Wow. Okay, so the Modi-Trump beef continuing to heat up right here. Obviously, these guys are not happy. Multiple reports say President Trump is considering banning American IT firms from outsourcing their work to India. Now, that would be quite the challenge for American firms because a lot of them outsource jobs to India. You got entire Indian companies that are dedicated to getting business from American companies. So, you know, I think Modi's going to get a deal with Trump. I really do. I don't think Russia and China are his friends. By the way, did anyone see Putin, Kim Jong-un, and Xi Jinping on that parade that they were having all together? It's kind of wild to see all three of them together. Like, I don't think India wants to be in that part of the geopolitical ties. Like, I think they want to come back to a democracy like the United States because we supposedly have a good relationship with them. But Modi's pissed off at Trump on the Russian oil situation. So I don't know. And now, like, one way to piss him off even more is say, hey, all those Indian jobs, they're going to zero once I force American companies to not be able to hire people there. So this is going to be very interesting to see how it play out. I think it's a negotiating tactic. It's probably not a bad negotiating tactic, given that is a big part of India's economy. But we just have to see how that ends up playing out long-term here. Rocket Lab is up 2%. Norwegian's up 0.5%. Duolingo continuing to get decimated right here. Gold's at 36.11, basically at all-time highs. And Duolingo still at $268. This one just in the gutter. Let's pull up the stock draft. I haven't looked at it today. I think I might be below Tanner now with Duolingo. Wow, I am barely above Tanner because of Duolingo. I am down 43% on Duolingo. Up 8.5. Matt's up 23. Tanner's at 8.3. So Tanner is like 0.2 away from me. Steve's down -0.5. And Chris is up almost 1%. That stock is hurting everything. That would definitely increase non-farm payroll job numbers. It would if American companies had to hire American tech workers. However, it would hurt margins. I mean, dude, some Indian engineers are like literally 10x cheaper than American engineers, which is why there's so much outsourcing from every major tech company. in India. I mean, we hire a lot of software engineers in America, but we hire a lot more in India globally, just because there's a lot more of them there. And so ultimately, the worst part about the outsourcing to India is that Indian people get all the technology training and that Americans didn't. Yeah, 100% as well. So I don't think Trump's serious about that. I think Nadella and all these guys would definitely feel, again, Microsoft, Google, they have a lot of people in India. I think they would be quite upset about that, and they probably would lobby Trump to go against it. But I think Trump is a negotiating tactic. And now we just have to see how it ends up playing out. What are your thoughts on Anthony Tan's new podcast? So I watched it at the airport a couple days ago. I liked it. There was nothing too crazy that I learned from the podcast that I didn't know before. I'll link it right here in the chat for anyone who wants to watch it. But there were some really good moments about Anthony Tan talking about what it means to build a company that focuses on the most underserved population of Southeast Asia. And now that they're profitable, the runway of growth he sees to increase that profitability while maintaining that mission of serving the most underserved. And there were some moments as well where he talked about the governments in Southeast Asia and how you have to interact with them. So for anyone who owns Grab, I would definitely watch it. It reinforced my belief that Grab at this price is not expensive, and risk reward on Grab versus some of these other stocks, I think in the next 18 months will be better, but we got to see them put up the earnings growth to get there. All right, we'll end out on this. Here's one of the Goldman Sachs head analysts talking about this jobs report today. We'll see their take versus JP Morgan, and then we'll close it out from there.
You're still here after the president's assault, which we'll talk to you about in a moment. But just reaction on jobs to this weaker print.
It was a little bit weaker than we had expected, but we've been looking for a somewhat soft report with an increase in the unemployment rate, with a sort of sub-consensus job gain. I think the implication is that the labor market continues to be pretty slow. Hiring is very slow. Layoffs are still low, but the labor market's softening. And my main takeaway is that this seals the case for the cut in September that we've been looking for a while, and probably additional cuts beyond that. We have cuts in October and December as well, and I think that looks quite likely. Obviously, that's going to depend on the data, but I feel very good about the forecast.
There's also this debate about whether the Fed can start cutting now and help shore up the job market. Does it work that way?
Well, that's the idea, that you move closer to neutral, and that supports the job market in a period during which hiring is quite soft. And yeah, at the margin, that should be expansionary and shore up the job market, as you say.
There was some discussion yesterday out of ADP that maybe the break even was higher than we think, and that it might have resulted in a 4.5 print today on unemployment. Did that make any sense?
Well, 4.5 would have been a very large increase. So I thought, I don't think that was really on the table. Obviously, month-to-month changes in the unemployment rate can be noisy, so you always want to look at a range of different indicators. But we've been looking for 4.3%, and that's what we ended up getting.
So no SOM rule risk, or your recession odds are still, I think, in the high teens, maybe?
We have it at 30%.
Oh, really?
We've been there for a while, but that's it on net over the last few months. It's been edging down. I think the consensus is somewhere in the 30s. But I think, we'll be watching the unemployment rate, obviously. We are adding jobs below the break-even rate. We think that's probably in the sort of 80,000 range or so, probably coming down over time. But, right now we're adding a relatively small number of jobs every month.
So is it the case, and can it be the case, that job growth slows down like this and the overall economy holds up pretty well?
Well, that's what we've seen so far. The economy is still growing. GDP is growing, somewhere in the mid to high ones, probably in the third quarter. And that's our forecast for the remainder of the year. As we go into 2026, we have sort of gradual reacceleration back to something closer to a trend pace. We put trend US GDP growth, potential growth at about 2.25%. And, we think that we'll be moving in that direction.
Now, again, he's at 2.25 with lower rates. If that 2.25 ends up being 3.5%, if we end up compounding at 3.5, 3.5, all these analysts are going to have to take their expectations higher, right? And so I think one thing that a lot of these analysts are thinking about is, hey, rates are coming down. Can the growth hold up, or is the economy going to materially weaken to the point where they can't accurately point or paint a picture around GDP growth? If that doesn't happen, which again, I think this is the scenario all of us are looking for. Rates come down, inflation stays flat, labor market weakens, but not weakens enough to cause a recession. Corporate earnings continue to go up, and then potentially the wild card, AI, creates a little bit of deflation in the economy and increases the productivity margins, et cetera, which helps corporate earnings, along with rates coming down. That's your bull market. That is your bull market. Now, obviously, AI demand has to hold up. Data center demand has to hold up. Companies have to see the ROI from AI. Something like Siri has to actually reach 2 billion people. So many people on the planet have no idea what AI is, and that's because the biggest tech companies in the world haven't really been able to get billions of users using these products on a daily basis. If all of that starts with FSD, robotics, like if all these verticals converge going into the next couple of years, regardless of the macroeconomic tailwinds or headwinds, barring a recession, we have a bull market. And then crypto. That's one I didn't even get to mention. Crypto. Again, I am going to do a very detailed post on Twitter about the Genius Act and what it means for U.S. Treasuries. But it's almost inevitable to me that the government is trying to pump up their bonds by getting people to buy them. And the way to get people to buy them is to peg them to the dollar, which means you got to get these stable coins to hop on board. That is a whole nother form of innovation in terms of different platforms from a tokenization, decentralized finance perspective, stablecoin perspective, on top of a variety of blockchains, not just Ethereum, but Solana, Bitcoin, maybe XRP, we'll see. All of these that are developing at scale and that are expanding and that are growing, and that the biggest companies in the world, the JP Morgans, the Wall Streets, the Goldman's, the Walmarts, Goldman Sachs, PayPal's, et cetera, are embracing at a sophisticated level. It just, like, when you put like this, again, like, you can get bearish, you can get short-term upset about market, like, but to deny everything I just said for the last 5 minutes as like a macro bull case for growth, GDP, AI, crypto, and the economy is just hard, because you have to have too many counter arguments. And usually in debate, like, you can have some counter arguments, but if you can't counter a deeply multifaceted layer and thesis, it likely means, even if you're right on some parts, the other parts you might be wrong about. AI has to be a bubble. Crypto has to not work. Job growth has to be abysmal, which theoretically, if AI gets rid of jobs, that could happen. But then this is the debate that we were talking about on Tuesday. What if AI decreases costs so much that even if there's less job growth, costs for everything, labor, goods, services, comes down so much that everything becomes more affordable? That's more of like a philosophical question. I don't know if that plays out. Does the government introduce UBI? There's a lot of these variables, but at its core, I think if you own equities, which is what we all care about, the bull market thesis is intact. And it's going to be a volatile ride, but I think we all likely want to be net long, even if you're hedged, even if your position sizing is not as aggressive as it was 3 years ago when all this started, to assets that are growing, especially in a world where rates come down to the level Trump wants it to come down. I mean, it might create an asset bubble, and we will figure out in 2026, 2027 when that asset bubble is going to pop. That's a problem for another day. But we probably want to participate in the creation of that asset bubble, because there will be some money to be made if that ends up happening. And so we just got to see how that all ends up playing out. There we go. That is it. All right, folks, that's it for me. Hopefully this 4-hour stream makes up for no market open yesterday. Likely no market close today, but we will be live about 20 minutes before this not jobs report, S&P inclusion. And yeah, I'm not expecting hood, but if we get it, great. I mean, I'm not expecting the S&P to say anything. What if they just say, hey, there's no rebalance? So we might have to deal with that. If we don't get the news by 5:30 Eastern, there's probably no rebalance. Usually, like last time Block got in, we knew by like 5:20, 5:25 latest. So if we don't get news after 15, 20 minutes of the scheduled announcement at 5:15, they're not doing a rebalance. Last time they didn't even put out a press release that they weren't. It took them like 4 hours to mention that they weren't doing it. So we'll know pretty soon. But if hood gets it, great. If they don't get it, then we'll keep moving forward from there. That's it. That is it. All right, folks. Thank you all for joining. Appreciate it. We'll be back to normal scheduling in about a week. We got Vegas next week, so that's going to mess up some of the market open, market closes on Tuesday and Wednesday. But I will try to get some streams in with Tanner and Roy. Hopefully that'll be fun. And I will see everybody pretty soon. Sunday, I believe we will still have the future stream. So Sunday will be good. S&P 500 right there, down about 0.53% on the day, 645. I am audio proofing the new studio. I ordered all the stuff. It's already at the apartment, so I just got to make sure the audio, the reverb is good, which hopefully should be good by Sunday. And yeah, we'll be back on the future stream, and then we'll keep going from there. Word of the day. I should probably do that because I forgot about that for the past couple of days. I think I've heard of this word before. Talisman? Or talisman? Did you guys hear it? I didn't hear it. Am I on Bluetooth or something?
Talisman.
Oh, there it is. No, it was delayed. It was delayed. Talisman, an object engraved with figures or characters or worn as an amulet or charm. The most valuable find at the excavation was the talisman in 3 different languages. He kept the talisman in his wallet, a gift from his grandfather before graduation. Yeah, I think I've heard of this word before, but Spanish word, right? Yeah. I don't think I actually have one of these, but some of you guys might have one of these as well. Shout out to June, by the way. June, I see you in the chat. Hopefully things are going well. I told you guys last Wednesday, like 2 days ago, that June basically had a heart attack, is what the doctors told her. And so I think she went into the doctors a day and a half ago, and they got to kind of observe what's going on in her heart. So June, I see you in the chat. Hopefully things are not too bad, and we're all praying to make sure things continue to get better. But the fact that she's in the chat right now probably means that she's doing at least all right for now, which is good. So absolutely hoping for the best for you, June. June's been a big part of the community for a while. Yeah, heart attack and stent given. She's been here for like the past 3 years. So, you know, really means a lot to see her here every day, be part of the channel, be part of the community. She was a mod. She was in Miami, so it was great to see her literally 2 weeks ago. And hoping that everything goes well for you, June, as well. She also, you know, I think she deeply appreciates you guys in the chat giving her some well wishes, especially, you know, when people have been in the chat for this long and been part of the community for so long. You know, you share stuff in your life that is very important, even if it's personal and it's not market related. And I think for all of us, you know, that is why this community is so tightly knit together. It's like we actually care about each other, which matters, you know, in a world in which it's hard to actually care about human beings. It's really cool to care about each other. By the way, the Miami meetup, I was showing some of the pictures of the group picture to the Palantir employees, and they were just like, they were like, what? That is like, they were just like blown away by how cool it was. And the reason I was showing them is because like I think like literally 99% of the people in Miami, and I'm not even exaggerating, like at Toronto it was like 80%, Boston it was probably around 75, New York it was probably 85. Miami was like 99% of people bought Palantir, like early. So I was showing the employees just like, you guys made a lot of people happy, you know? And so they definitely were very grateful and thankful to just seeing what they've been working on for the past 20 years actually manifest, and for the market to kind of recognize that, and for a lot of regular people like you and I to kind of change our lives for that. So super awesome stuff. I'll have more thoughts on Aipcon next week. I'll have some more interviews. Again, just want to thank everybody for all the support. It has been an incredible journey, incredible ride. It's kind of hard to put into words. I think someone asked me the other day as well. It's just like, what does it feel like? I don't know. And honestly, I don't even want to try to come up with the words to try to describe all of this, because sometimes things are so surreal. You don't even want to put word, like Miami itself was surreal, just seeing everyone all together in one location. And so it's just been a surreal journey that's hard to describe. I think one of the Palantir employees yesterday was asking me, like, how does it feel for all this to play out? Because, you know, a lot of the Palantir employees don't speak to Karp, right? Because Karp's busy. He's constantly like, you know, a lot of people that work at a tech company don't talk to the CEO. And so even they were like, he spent 20 minutes with you on stream. Like, so it is absolutely surreal. It is not because of me. It is because of this entire community coming together and actually building something so freaking real and authentic that one of the most authentic people that I know, Alex Karp, has resonated with it. And it's a journey of a lifetime. It is absolutely the journey of a lifetime. So it was incredible. It was incredible. There's nothing else to say other than it was incredible. I think we just want to keep going forward now. And, one of the other things Karp said yesterday is like, hey, we are just beginning. So job's not finished. We got a long way to go. There's a lot more momentum over the coming decade. And the cool thing is all of us as a community together get to be part of that, which is, it's priceless. It really, really, really is. Like when you sit back and just think about everything that's happened, it is priceless for how it's playing out. And the meetups are just so much fun because you get to experience that surrealness with everyone else who also understands how special the journey has been. And, we just want to keep that going for a long time. So there we go. That's what we got. By the way, Singapore meetup. I was talking to my uncle the other day. It is in the works. We are getting ready to plan it. He said, bro, I already got a location for you. I'm going to start getting it ready. So July of 2026, if you're in Singapore, it looks like something's going to happen. And it should be a fun time. And then I'll give you guys updates on future meetups outside of Singapore as well. But I think that one for sure, July 2026, has looked like it's getting confirmed. And it'll be a fun one to see everyone in person in Singapore. All right, that's it. Thank you, everybody. Appreciate it. I will see you guys probably 20 minutes before this S&P inclusion. And hopefully we get some good news. If not, it is what it is. We'll keep going from there. And if I don't see you on the S&P inclusion announcement, then I'll see you on the Sunday futures. And we'll keep going from there. All right, that's it. Thank you, everybody. Appreciate it. Love you all. I'll see you guys in a few hours. Bye, everybody. Have a good one.